It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all in the red. We are off session lows, but still a down Friday. As a matter of fact, we are now on track for a losing week for the S&P 500 index. On the week, that index now down by about 0.5%. Stocks, though, extending losses as a sell-off in technology shares drag global gauges from the brink of records. Yesterday, indeed, the S&P was at a record. Right now, the S&P is down 64 at 6836, a drop there of 0.9%. Dow Industrials down 164, down 0.3. NASDAQ down 341, a decline there of just about 1.5%. Oracle deepened its losses on delays to some of its data center projects. Oracle shares now down by 4.6%. The 10-year, 4.19%, with the 2-year, 3.53%, and the 30-year, 4.85%. Gold is up 0.3%, 42.92 the ounce. West Texas Intermediate crude oil up 0.1%, 57.66 a barrel. And Bitcoin now at 90,162. Bitcoin is down 2.9%. Darryl Cronk is Chief Investment Officer for Wealth and Investment at Wells Fargo Bank. And on surveillance this morning, he said markets are looking to Washington into the new year.
The trend lines are what we want to pay attention to, and that's, monetary stimulus, fiscal stimulus, deregulation, what we think is a CapEx super cycle, and the M&A world picking back up again. All those things have real materiality to them and play through the day-to-day noisy headlines.
Darryl Cronk of Wells Fargo interviewed on Bloomberg Surveillance. Couple of retailers after earnings. We do have Lululemon Athletica surging now by 9.5%. Costco after earnings down by 1.7%. Recapping the 10-year, 4.18%. Bitcoin down 3%. S&P down 1%. NASDAQ down 1.5%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, the Friday edition. Lots going on. Here he is, Joe Matthew.
You said it, Charlie. Many thanks. We'll have more on the markets with Charlie Pellet at the top of the hour, 1 p.m. Eastern time, as we welcome our global television audience to the conversation. Thank you for making us part of your Friday. You made it to the threshold.
Yeah, I'm back. Sorry, guy. The internet keeps ditching out on me. I don't know what's going on. They must be doing construction nearby.
That's the big question today in Washington after the latest swing at the ball failed in Indiana. This is the latest state attempting to redraw its congressional map to try to favor Republicans in the midterm elections. We've been through this. Started in Texas, went to California. They've all been bound up in court. But I guess not the case in Indiana because
all right, let's make sure everything works.
Senate with 40 Republicans and 10 Democrats decisively rejected this whole idea to refit the congressional map. We talked about this just a couple of days ago with Congressman Stutzman from Indiana. Here's what he told us.
In Indiana, I think the maps were actually very favorable to the Democrats. If we're going to play partisan politics, Indiana is a 9-0 state. And so the Republican friends in the state legislature there need to realize we're in a national battle here. This isn't just about Indiana. It's a national battle where we need to be sure that there's equal representation in Washington for Hoosiers.
Well, not so much. Let's assemble our panel for their take on it because this is an evolving story, and it's one that we're going to be talking about probably for many more weeks to come with other states in the mix. See what they're doing in Virginia right now, the conversations that they're having even in New York. Bloomberg Politics contributor Jeannie Shanzano is here, democracy visiting fellow at Harvard Kennedy School's Ash Center, and Rick Davis, Republican strategist and partner at Stone Court Capital. Rick, how are we looking at this? Because if you read the commentary and the tip sheets in Washington, the angle that everyone is taking is Donald Trump finally hit the wall, that his influence has been checked by a Republican legislature. Is that the fact, or is this just another stop on the road to rewriting congressional maps all over the country?
I think it's probably more one stop on the road. I mean, there's obviously a lot more going on than just Indiana. And yet, at the same time, I mean, the president and the vice president were heavily invested in flipping the state to get better, pick up 2 extra seats. And And so they kind of made it about them, right? They didn't do this discreetly. They didn't say, to the Senate pro tem,
All
hey,
right.
Glenn, why don't you pick up a couple of seats and
Yeah.
really help us out in Washington and be great for the state of Indiana.
We're ready for the Civil
They
War,
really,
Henrik. I got to be honest with you.
hit these guys hard, and for various reasons.
If the Democrats get back in
More than
charge,
20
it's going to get
Republicans said
bad.
no, and it wasn't just one person. It wasn't just a holdout.
And it looks like they're gonna. It looks like it's inevitable.
Universal pushback from the Republicans there, and I think you could trace it to a lot of different reasons. One, some people just disagree with this kind of midterm redistricting. Two, a lot of people
It doesn't even make sense for a lot of
feel
it.
good about that and wanted to push back because they felt
Let's
they
get
would
set
be
back
treated
up and do
poorly.
some
Three,
business.
they worry about the consequences of
Fuck.
diluting all these districts. You and I have talked about dumb redistricting. They are particularly worried about that, where you got a Trump plus 10 district and all of a sudden, you lose. So there were literally dozens of different reasons for people to vote the way they did, and yet it's certainly looking like a big rebuke to the president.
Well, it's hard to not see it that way, I guess. Jeannie, this is a 31-19 defeat in a state that Donald Trump won by almost 20 percentage points. Is there an opening here?
Yeah, and I don't think Rick heard the president, because the president said, "Oh, I didn't work too hard on that. I was barely involved in that, and look what happened."
Yeah.
The fact is, to Rick's point, there are a lot of reasons that people could have pushed back on this. One of them is just plain simple math. I mean, you look, Democrats are outperforming by 13% in off and special elections this year. If you take all those Republicans who are under 13% and then you say you're going to redistrict, you put people who might be safe at risk. So the math doesn't help this. But there's also the reality, if you're a Republican in Indiana and you're looking at Washington, D.C., what are you seeing for the last few weeks? Republicans pushing back on the president with absolutely no repercussions. From Epstein, Marjorie Taylor Greene, the Pete Hegseth issue, healthcare. I mean, the list goes on and on. Not just taking on Donald Trump, but Mike Johnson as well. So
I'm behind on everything now. Mike, I got 2 calls to make. Let me get set back up and I'll make my calls.
And Republicans are
See if we can get into a short if it reverses back.
I can't just follow this guy. I've got to watch my own back. This is what happens. And so the president has to wake up to that, and there's not a lot he can do. My understanding is if they try to primary these folks, that's after the midterm. I don't know how this helps Donald Trump.
Well, a lot of questions about the fallout here. Hashtag pass the map. In a post on Twitter yesterday morning, 10:30 a.m., it's been viewed almost 7 million times. This post was made when most people thought that it was likely to pass. Heritage Action, i.e. Heritage Foundation. Rick,
all right, let's see how long we hang on now. They got construction down. They're bringing a new development online, I think, and it's
all federal funding will be stripped from
messing everything up.
Roads will not be paved. Guard bases will close. Major projects will stop. These are the stakes, and every no vote will be to blame. What's Indiana in for here, Rick?
Yeah, I must say, folks who I talked to who were involved in sort of monitoring what was going on in Indiana state legislature, when that hit from the Heritage Foundation, probably 3 Republicans at least switched their vote to vote against the measure because it angered them so much. So, I mean, I think all these things have consequences. Whether the president actually follows up on that, it wasn't a direct threat by the president. He has a way of making these threats and then not living up to them. It's kind of the domestic version of Taco. And the reality is all we can do is wait and see. Indiana is a core Republican state. Last thing you want is president, punishing Republicans for something that really is a non-material issue to most everyday voters.
Mm-hmm. It's another Free Taco Friday, I guess, Jeannie. So is the story the opposite of what the president said? To your point, he told reporters, I wasn't really working on that. Did he, in fact, overplay his hand?
I think he absolutely did. I think this was an unforced error on the part of the president. I think if you want to play politics, there was a way to do this rather subtly. You don't send the vice president out there to harangue people. You don't have your son going off on social media haranguing people. I'm laughing when you're talking about this heritage tweet or social
Yeah.
media. Kevin Roberts has a lot of problems over at Heritage. But what do we think Donald Trump is going to say? Probably the same thing he said on the campaign trail about Project 2025. I don't know who these people are. I never made this threat. Never heard of the Heritage Foundation or Kevin Roberts. The whole thing is an unforced error on the part of the president and his team. We've always talked about the fact that redistricting at this point is a fraught endeavor, and you have to be careful what you wish for. Donald Trump went into this assuming that if he won these districts, that he could pull them through in the midterm. That is not necessarily the case. He would be far better off focusing like a laser beam on fixing the economy and prices and inflation than he would by going out and redistricting, which seems to, at this point at least, have started to backfire on him. With the loss of Indiana, they now look like they may just break even on this thing. If other Democratic states go further, they could even lose seats in this game. So this is not a good situation for the Republicans to be in. It will probably be a wash in the end, but it's a waste of time. He should have focused on what he promised, which was his economic agenda, and his poll numbers are falling through the floor at this point.
Jeannie points us right back to Rick's dummy mandering. If Republicans were so turned off by this yesterday, Rick, does this impact efforts in other red states?
It could. We've seen Kansas take a similar line, not really wanting to jump into this for some of the same reasons. And we've seen Democratic states. I mean, Maryland, the leadership in the state Senate.
All right, guys, I got to make a couple calls from work. I should be up and running, so let's cross our fingers it doesn't go down again. All right, I'll talk to you in a little bit.
About, monkeying with their districts. And so I do think there is, like the physics of politics, an opposite and equal reaction. California and Texas did their things, and now everybody else is sort of, geez, do we really have to walk the plank on this? It's really not healthy for our state politics. And so let's see. I tend to agree with Jeannie that at the end of all this, whether there's 1 or 2 seat advantage by either party is almost irrelevant to what we think is going to potentially happen in this elections. And if you listen to the Republican National Committee chairman, he's predicting a dire outcome in the midterms. And so a couple of seats are probably not going to make that much difference.
Huh. Yeah, wow. Hey, Jeannie, I'm going to throw you a curveball. You said something that got me thinking a couple of minutes ago. I believe it was Epstein. You know what nobody's talking about in Washington? That deadline to release the Epstein files that came from a discharge petition signed by the president is 1 week from today. I know that the Democrats are trickling out more pictures, more photographs today showing Bill Clinton, Woody Allen, Donald Trump. But are we going to see the files in a week?
Alan Dershowitz. The list goes on, Joe.
Steve
Epstein,
Bannon.
He's like, Steve Bannon. It's like a really, really bad situation for the White House. I'm going to be curious to hear what the president has to say if he takes questions from reporters at, I believe it's 3 p.m. You'd know better than I do.
Yes.
At this bill signing. If he is going to take questions, I'm certain some of these pictures that the Democrats have released today, and there's a lot more to go, are going to come up. And some of them, including some that I can't name, they don't show anything illegal, but certainly things that people will find disgusting. And so what does the president do? I believe we have the 19th to 20th. They're going to have to make a decision. And of course, we have a law that he must release, or the DOJ must release. My suspicion all along has been they will try to hide under an active investigation, but I'm not so certain that's going to be palatable at this point.
Just 30 seconds, Rick. Should Americans prepare to see these files unveiled next week?
Yeah, I get the impression it's kind of fallen off the front page to most Americans. Yeah. But obviously the run up to this on Friday of next week will start to get more and more intensity around it, maybe even after today's presser with the president at 3. So, yeah, I think that there are a lot of people, especially in MAGA, who want to see the truth.
Well, there you have it. That means everyone's going to be listening at 3. We'll see if the president's on time. Rick Davis and Jeannie Shanzano are always on time, and they'll be back in our second hour of Balance of Power with much more to talk about. Live from Washington, I'm Joe Matthew. This is Bloomberg.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The drumbeat gets louder over war powers in Washington. Welcome to the Friday edition of Balance of Power. As members of Congress demand a say in the administration's military actions in the Caribbean, we're going to talk with the author of a war powers bill that's set to hit the floor coming up when we're joined by Democratic Congressman Jim McGovern of Massachusetts. He's with us in studio today, and we'll tackle the health care debate with our political panel after dueling health care bills failed yesterday in the Senate, setting us up to go over the cliff. Later, our conversation with the CEO of Anchorage Digital, the first federally chartered crypto bank. all after a look at Wall Street. It's not been fun so far. Charlie Pellet has the latest from World Headquarters in New York. What's going on, Charlie?
Right now, we are lower across the board. Joe Matthew, the key takeaway perhaps at this hour, we are off session lows, but still looking at a loss of almost 1% in the S&P 500 index, down 63 now at 68.37. The real damage, though, being done among tech names. Case in point, Oracle, the stock down again today, tumbling 4.2%. Broadcom, after earnings, down 10.8%. Nasdaq down 1.4%. The Nasdaq 100 index down 1.7%. Keeping it all in context, S&P 500 index lower by 64, down 0.9, while the Dow is down 151, a decline of 0.3%. So stocks are extending losses, a sell-off in technology dragging global gauges from the brink of records. The 10-year, 4.18%, the 2-year, 3.53%, and the 30-year, 4.85%. Gold at $42.92 the ounce. Spot gold up 0.3%. Silver down 3%, $61.67 the ounce. West Texas Intermediate crude, we'll call that flat on the day now, $57.62 a barrel. And Bitcoin down almost 3%, 90,161 on Bitcoin. President Trump says Thailand and Cambodia have agreed to stop fighting after he spoke with their leaders to urge them to end, quote, the very unfortunate reawakening of their long-running war. Recapping, S&P down 65, down 0.9%. Right now, balance of power continues. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, we thank you. 20 minutes from now, we'll check in the markets one more time with Charlie Pellet as we make our way through a bumpy Friday here on Wall Street. Here in Washington, it's matters of war and peace making news today, and we just got a string of headlines from the White House after the president took to Truth Social to let us know about a call that he had a short time ago. Again, matters of war and peace. Trump says he had a good conversation with the prime ministers of both Cambodia and Thailand, knowing that he helped these two countries end a conflict recently. He talks about it frequently as he dials up the number of wars that he says he helped to stop. In this case, Thailand, Cambodia will go back to their original peace accord. Both agreed to cease all shooting. A ceasefire will be effective this evening, according to the President of the United States. We still have a lot of questions, though, about Ukraine. With the headline on the terminal, Trump says U.S. would help with Ukraine's security in a peace deal here. And this is a bit of an update based on what we have seen and heard from the president most recently. President talking as well about this idea of potentially going to Europe as soon as this weekend for peace talks. He's not planning to. Here's what the president said.
We'll see whether or not we attend the meeting. We said we'll attend the meeting if we think there's a good chance of they want me to attend, they want us to attend. And we'll be attending the meeting on Saturday in Europe if we think there's a good chance. And we don't want to waste a lot of time. We think it's negative. We want it to get settled. As you know, in the past we spent could be $350 billion giving it to Ukraine. We got nothing in return, but we gave it to Ukraine. I ended up getting rare earth in return, even though I didn't spend money. And we are now selling weapons to NATO. We're not selling it to Ukraine. We're selling weapons at full price to NATO, as you know. They distribute those weapons probably to Ukraine for the most part.
All right, so it doesn't sound like we're going to the meeting on Saturday. But the president again says the U.S. would be willing to contribute assistance to Ukraine as part of a security agreement to end the war. And this really could be seen as progress. Bloomberg Washington correspondent Tyler Kendall's been tracking it for us, having just come back from the White House. Tyler, are we talking about assistance militarily, financially, or both?
Well, it could be both, Joe, though we haven't gotten those exact details from the White House yet. But you're exactly right. It is significant that President Trump is speaking openly about this when it comes to any potential security guarantees for Ukraine, because this has long been a sticking point that Ukraine and our European allies have been pushing this White House to commit to. Because as you well know, for months, we often heard from U.S. officials that any sort of guarantees would be implicit guarantees because the U.S. would have a vested economic interest in Ukraine after inking that critical minerals deal earlier this year. Then the tone started to shift, and we know that the U.S. had committed to things like intelligence sharing and air cover defenses in that way. But we know what Ukraine really wants is something a little more similar to NATO's Article 5 Mutual Defense Clause, and it has yet to be clear whether or not the U.S. would go that far to make such a commitment. But we know that really what the U.S. wants to do is see some forward progress when it comes to these ongoing peace discussions. And while it is unclear and at this point doesn't seem like the U.S. is going to take part in these talks over the weekend, it is worth mentioning, Joe, that the Ukrainian President Zelensky did have a phone call earlier this week with Secretary of State Marco Rubio, with Special Envoy Steve Witkoff, and it is becoming very clear that the U.S. is pushing European allies and pushing Ukraine to get on board when it comes to this peace proposal that's been evolving.
Hey, Tyler, we're going to be talking in a moment with Congressman Jim McGovern about a War Powers Act following the activity that we have seen in the Caribbean. We just seized an oil tanker, as you and I have been discussing. There are big questions about the legality surrounding all of this and exactly what we're going to do. But the White House is signaling that there will be more where this came from. What can you tell us?
Right, and that confirms some pretty incredible reporting from our colleagues at Bloomberg News. People familiar telling us that the U.S. has now entered a new phase when it comes to their strategy with Venezuela amid the seizure of the oil tanker, but also additional sanctions this week from the Treasury Department against oil companies, oil tankers, and close associates of Maduro. This is designed to block off Maduro's access to these critical oil revenues in a bid to get him to relinquish power. Keep in mind, about 80% of Venezuela's export revenue is tied to oil. So our understanding is Venezuela right now is preparing potentially for the U.S. to go further and seize additional oil tankers. And this is going to be really critical, one, to their economy, but also as we look at those broader geopolitical relations. And we know that so much of Venezuela's oil ultimately makes its way to China. So it's something that we're going to be watching very closely here. Now, this specific tanker that we are discussing, as you and I discussed last hour on Balanced Power, it's now heading for Houston. The White House Press Secretary Caroline Leavitt confirmed yesterday that the U.S. does have intent to seize the oil on board. According to satellite imagery, we're tracking about 1.85 million barrels of Venezuelan crude on that tanker.
Wow. Yeah, map go on your terminal. Tyler, thank you so much for the update. Speaking of the terminal, this headline just went red. States to sue Trump over $100,000 H-1B visa application fee. This has been a pretty controversial idea, and it looks like it's going to court. Let's stick with Venezuela for a moment, though, knowing that this boat has been seized. And look, we've got another 6 tankers that have been sanctioned. So we could soon have our own shadow fleet, it sounds like. The president talked about this yesterday at the White House. Listen.
It's about a lot of things, but one of the things it's about is the fact that they've allowed millions of people to come into our country from their prisons, from gangs, from drug dealers, and from mental institutions, probably proportionately more than anybody else. So it has to do with a lot of things. They've treated us badly, and I guess now we're not treating them so good.
That's where we start our conversation with the gentleman from Massachusetts who has authored a War Powers Act that could soon hit the floor. Unless, of course, the speaker doesn't want to see that happen. This is a conversation that Democrats and Republicans are having here in Washington. Jim McGovern, Democrat from Massachusetts, ranking member on the House Rules Committee, with us in studio right now. It's really great to see you.
Happy to be with you.
Thanks for coming in, Congressman.
My pleasure.
You've introduced this War Powers resolution some time ago. Will it hit the floor soon?
Yeah, I expect to force a vote on it next week. It'll be ripe to be considered on Wednesday or Thursday of next week. We have Republican co-sponsors, Representative Massey and Representative Bacon and Marjorie Taylor Greene are on board on this resolution as well. Again, this is not a Democratic initiative. I mean, this is a bipartisan effort by those of us who actually believe the Constitution means something, and Congress has a role to play. And we don't want this president going into a war without a debate and without a vote and authorization by Congress.
Would this be specific to Venezuela or more broad?
It would be specific to Venezuela because that's the conflict we seem to be getting sucked into.
Yeah.
Although the clip you just showed of the president, he went on to further threaten Colombia, where he might do further action. But look, wars are easy to get into; they're hard as hell to get out of. And we have a history, of talking tough, of getting sucked into these wars that cost, billions and billions of dollars, and then we find ourselves in a quagmire that we can't get out of.
Now, I know for a fact that you understand the politics of the Caribbean better than most on Capitol Hill. you helped to begin normalizing relations with Cuba in the Obama administration. You've spent a lot of time in the region. So what do you think the president's aim is here? Is it regime change or something else?
Yeah, I think it's oil, quite frankly.
Yeah?
'Cause I think this president is not about promoting human rights. He doesn't give a damn about democracy. And this is not about drugs. I mean, he pardoned the former president of Honduras, who's one of the biggest narco traffickers in the world.
Hundreds of tons of cocaine.
So I think, I mean, there must be some financial interest in pursuing this policy for the president, because that's all he really cares about, making money for his family and money for those who are close to him. Look, our history in Latin America has been one of arrogance, has been one of putting profits ahead of human rights. And by the way, this administration doesn't give a damn about human rights. They just issued their national security strategy. And this is the first administration that has removed the word human rights from the strategy. So this is about Donald Trump's ego, and it's about, I think, oil. I think that's, at the end of the day, I think that's what
Is that why we're seizing tankers?
Again, it would be nice if we had a functioning Congress that would call his administration up and ask these questions, like, why are we doing this? Why now? Again, this is not about drugs. More drugs are coming from Mexico and China than from Venezuela. So what is the strategy here? And the president's threatening, action on the ground in Venezuela. Now that's that's war. He's threatening to cut off, air traffic.
He says we're going to do the land.
Right. So
do you think that he would actually strike ground targets in Venezuela?
Well, if he does, that's an act of war.
Yeah.
That's an act of war.
Is blowing up drug boats not an act of war?
Well, I mean, I think it is. I mean, we have some of my colleagues are debating that issue, but we're not only blowing up drug boats. I mean, it appears that we are guilty of serious human rights crimes by actually bombing survivors who are begging for help. Again, Congress ought to be demanding a clearly defined mission in terms of what he is doing in Venezuela. And up to this point, there have been very few questions, and he's provided very few answers.
You said something interesting, a functioning Congress. Yeah. Just back off what we're talking about here for a minute. We are in a world now where it does seem that discharge petitions and reconciliation bills are the only way to get anything done.
All right. So who got in on this long?
You know how this works.
Yeah, I mean, this Congress
is pretty clear long right here. Confirmation would have been somewhere probably off the 20 if you were going to take it, and that looks like a pretty good trade right there. I haven't, with all the computer issues here, I haven't been able to do that. All right, I got to make another phone call, guys. I'll be back.
Next year, because the costs are so
I did teleported to my, there you go. Hey, 3-6, how you doing?
People can afford their health insurance, and we're not doing that.
Good job, 3-6. Way to take it down, man.
Stuff that is
all right, I'll be back in a few minutes, guys.
Even be considered by the Senate, that is going nowhere. I mean, again, Congress, a functioning Congress means that we do the work of the American people. And I'd like to think, no matter what your politics may be, making sure that we are addressing issues of affordability, which includes the cost of health care, are front and center. I mean, if the Republicans have a plan, then bring the plan to us. Let's debate it and vote on it.
Yeah.
They've got nothing.
Well, let's talk about health care, because Republicans put up a bill in the Senate yesterday. It failed. Then the Democratic plan failed. The Democratic plan, of course, would extend Obamacare subsidies. The Republican plan produced by Bill Cassidy would have health savings accounts. Congressman, I spoke with Nicole Malliotakis yesterday, who has signed on to a bipartisan effort in the House, D's and R's, that would extend the subsidies, would add some eligibility controls as well, because someone like Nicole Malliotakis is not a fan of the Affordable Care Act, as she told us yesterday. Let's listen.
There's so much fraud here, which is why we think we have the proper balance. And this gives us enough time, by the way, to then work over the next year or two to be able to come up with something that can truly replace the Affordable Care Act and bring costs down. Now, what the Speaker and leadership are saying is that we're going to take up a health savings account measure, which will help people certainly with their medical costs, and I support that initiative, but it doesn't go far enough.
Okay, but this is unlikely to see the floor unless the discharge petition makes that happen.
And even if we do the discharge petition route, we won't be able to get to it until probably in early January.
Sure.
My question to Representative Malliotakis is, like, where the hell have you been? I mean, you're a Republican. Your party's in charge. We've been talking about this issue for months. This is not something
since before the shutdown.
Right, since before the shutdown, well before. We've been talking about it during reconciliation. right? So we go back months and months and months, and we've been saying we got to focus on this. And all we've been hearing from Republicans is like, oh yeah, we'll get to it. And now we're out of time. People are going to lose their health insurance. Healthcare ought to be considered a fundamental human right for everybody in this country. You know, I mean, you need healthcare. If you don't have healthcare, you end up in an emergency room.
Right.
You know, I mean, this is crazy. So look, there are a number of discharge petitions that have been introduced with various approaches to helping people afford their health insurance. I mean, let's figure out what the best one is and let's move on it. But the stalling and the excuses and the finger pointing, it has to end. You know, we want to debate this issue. We want to vote on this issue. We want to help the millions of people in this country who are about to get screwed.
What's the conversation in Worcester, Massachusetts right now? If you stop in Kelly Square and ask somebody about their health insurance, are they seeing these increases and dropping off the rolls? Or are they saying, I can't afford it anyway, so to your point, I'm going to go to the emergency room when I get a call?
So, I mean, we're hearing some really terrible stories of people basically saying, I can't afford my health insurance. Our office is getting inundated with calls. Look, people in Worcester just want us to do our job. And they get it. There are differences between Democrats and Republicans. But at the end of the day, they want us to get something done. You don't have to agree on everything to agree on something. But whatever that something is, it has to be about improving the quality of life for the people who live in Worcester and all around the country. And the problem with what the Senate did on the Republican side is the stuff that they're proposing, you know, it doesn't mean anything in anybody's life. I mean, you know, saying I'm fixing healthcare, but in reality not fixing healthcare, not making it more affordable, well, that doesn't help anybody, right? You know, we ought to have a larger discussion on how we fix our entire healthcare system because it's a mess. It's too for-profit oriented.
Yeah, okay.
But we're not going to do that in a week or two, right? Right now, we need to extend these tax credits so that millions of people don't see their premiums skyrocket and millions don't lose their health insurance.
We've only got about a minute left here. A terminal user just wrote us while we're talking. Ask the congressman why the ACA failed that they designed. Maybe I can reframe that a bit. A lot of Republicans come on the air and they say this thing was never affordable. Obamacare itself has raised premiums. Is this plan broken?
No, I think it's not perfect.
Yeah.
But it is better than the alternative, which is no ACA, right? I mean, the bottom line is millions and millions of people have coverage because of the Affordable Care Act. You know, if we extended the tax credits, it's affordable. But as I said, we need to have a bigger conversation. Look, if it was up to me, we would have a Medicare for All system. When I was the chairman of the Rules Committee, we were the first committee, either the House or Senate, to do a hearing on Medicare for All. And I'll tell you, it was a very, very powerful hearing. But you know, to fix healthcare holistically, you know, it's going to take some time. In the meantime, let's extend those tax credits. Let's help people afford their health insurance.
Let's talk when the War Powers Act hits the floor. We've got a lot more to talk about, Congressman. Let's do this next time at Coney Island.
All right, I'm with you.
Onions or no?
Yeah, with onions.
With onions. It's the only way to do it.
Best hot dogs in the world.
They really are, too. I'm Joe Matthew in Washington. Congressman Jim McGovern of Massachusetts. This is Bloomberg.
Okay, hopefully everything's up and running now. So let's see what we can do. Everything's caught up. All right. Hey, Ballistics, everyone have a good weekend. I'm out of here. Didn't take any trades, but sure wish I did. I would have. See you guys on Monday. All right, Ballistics, see you on Monday, man. 836, I'm doing good, man. I had the internet crash a couple times, so I got everything back up and running. I hope it's stable now. They're working on the internet in this neighborhood. Caught up with real work.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. Techs are tumbling. We are off session lows. The Dow, the S&P, NASDAQ all in the red. S&P on.
Hey, Brandon. See you next time, man. You're still a winner if you didn't click buttons. Why? Because you didn't lose money. That's right, brother.
Yesterday, the S&P closed at a record.
That's right, man.
Down 156 now.
A lot of truth to that.
NASDAQ down 200.
We still got a couple hours, so I might have a chance. I'm going to be here, so let's see what happens.
Down 1.5.
You have a good weekend, man. Enjoy your Dominoes. I like the thin crust. I can eat a whole thin crust on my own.
Gold is up 0.4%.
Oh, all right, hold on.
99 the ounce. West Texas Intermediate crude flat on the day at 52.61 a barrel, and Bitcoin now down 2.7%, 90,356 on Bitcoin. Sources tell Bloomberg Oracle has pushed back the completion dates for some of the data centers it's developing for the.
All right, how's that? Mic check.
OpenAI.
Everything's been funky today.
Down right now.
Everything's been funky.
2.6%. After earnings, Broadcom shares, they're plunging 10.4%.
Check 1 2. Check 1 2. Check check.
News now wherever you get your podcasts. I'm Charlie Pellet. Balance of Power continues now. Once again, your host here is Joe Matthew.
All right, Charlie, thank you. Not a very fun ride today on Wall Street. We'll check back in for more on the markets.
Okay, cool.
In just about 20 minutes here.
All right, man. You have a good weekend.
Friday edition here on Bloomberg TV and radio. The question
Maybe I'll get lucky and get into a short here if it develops.
Washington, when it comes to AI regulations, this is not a new issue, but it's one the president decided to step into. Signing an executive order just yesterday, it happened late in the day, to essentially make it impossible for states to have their own AI regulations. This is a nationwide blanket, as the president says, to help companies cut through the red tape and continue growth to compete with China. We talked about this earlier today. A fascinating conversation on Bloomberg TV and radio with the president's crypto and AI czar, David Sachs. Let's listen.
The problem that we see is that you've got 1,000 different bills going through state legislatures right now to regulate AI.
I'll be right back.
And over 100 measures have already passed. Some of these bills are contradictory, and you've got 50 different states running in 50 different directions. That type of compliance regime is going to be very hard for small companies and startups, especially innovators, to comply with. And so what we need is a single federal or national framework for AI regulation, and in the meantime, create tools that the administration can use to push back on examples of the most onerous and excessive state regulations.
So what does this do? This order directs the U.S. Attorney General to establish what they're calling an AI litigation task force to challenge state AI laws that they feel are inconsistent with the policy. It also directs, in this case, Howard Lutnick, the Commerce Secretary, to publish an evaluation of existing state AI laws and issue a notice specifying which ones can stay and which ones need to go. Let's play it to the panel. Bloomberg Politics contributors Rick Davis and Jeannie Shanzano are with us. Rick is our Republican strategist and partner at Stone Court Capital. Jeannie is Democracy Visiting Fellow at Harvard Kennedy School's Ash Center, our Democratic analyst. Rick, have Republicans turned away from states' rights?
Oh, that's a legitimate question. Certainly this president doesn't think much about them. He's railed against state actions a lot, and he's obviously used the full power of the federal government to institute things like law and order in states against their interests. So, yeah, I think that this president is creating a new dynamic within the Republican Party that basically treads on the states' rights issues pretty well. Although, that being said, there are a number of Republican governors who have also opposed this effort by the president to have a blanket AI regulation usurping the states' rights. And so I don't think this debate is over.
This is, again, not new. In fact, there's been legislation. Senator Ted Cruz has tried to push this over the line a couple of times here, Jeannie. So what's going to happen? Are we going to have 50 lawsuits to track here?
Probably more than 50, Joe. We also had Steve Scalise, who also had a bill. They've been unable to push those through, and I think that that is absolutely where our attention should be. Donald Trump is not wrong to say we need federal policy regarding AI. The problem is just what you were talking to Representative McGovern about. We have an inept Congress, a do-nothing Congress. You can't turn to Congress and say, why don't you get on top of this? I mean, we all know, for instance, we have a huge privacy problem in this country. For years, we have yet to have federal regulation of privacy rights. What do we have? 50 states doing 50 different things, same thing in AI. It is a problem. So on that, the president's instincts are right here. The problem is doing it through an EO, of course. And then the other part of the problem is the fact that the president is so cozy with all of the big people who are in charge of AI in this country. I mean, I'm just reflecting on Time Magazine's cover of, the person of the year this year is the architects of AI. They're all sitting like on that bridge building the new century. That's a problem when AI is threatening young people graduating from colleges who can't get jobs. That's a problem when you have a president who has so much himself personally and his businesses invested in this. And they are all surrounding him at the inauguration and coming in and out of the White House. So on the one hand, Trump is right. We do need federal policy and regulation. We don't need it this way. It is the job of Congress, and yet we can't turn to them on this or much else these days.
So it sounds like Jeannie has a bit of a bad taste in her mouth when it comes to these relationships. Rick, she's right. Everyone's sitting on that girder on the cover of Time Magazine's been spending time in the Oval Office recently. But I'm struck by something that Scott Bessent said. He uses this line a lot. It's pass-fail versus China. We have the lead. We've got to maintain it. There's no second place in the AI race. Is that something that Americans need to start getting their heads around?
Yeah, look, I don't think it's insignificant what Secretary Bessent says. It is a race against time for technology that'll transform our economies. And just like the Industrial Revolution bolted the United States into a prime spot in the global economic sphere, so will AI. And so I tend to agree with Jeannie on this idea that you do need a general plan for the country related to that. And I doubt if Bessent disagrees, because that's basically what Trump is saying. But like, the place to have that debate is in Congress. Congress is the only body that can pass a law that usurps state law. And so an EO can be thrown away in the garbage the minute a new president steps in. And I would remind Jeannie, all these guys who are now for Trump were all for Biden 4 years ago. And so I think it's a good thing that industry is cooperating with the government. I think if it were the opposite, we would really have significant problems. So yeah, let's win the race. Let's improve our own economy by having this kind of productivity.
Well, Jeannie, if everybody's going to court over AI, looks like they're going to court over the president's new visa plan. This is a story that broke after we came to air. A group of states here announcing that they will be suing the administration to block this $100,000 fee for new H-1B visa applications, which allow employers to hire what they call skilled foreign workers. This is a different program than some you might see for agriculture, et cetera. These H-1Bs are specific to the companies we're actually talking about. Jensen Huang was asked about it. He seemed to indicate, Jeannie, that $100,000 was worth it based on the incredible amount of work that they have to perform here in the United States when it comes to AI and other emerging technologies. How's this going to pan out when it comes to the H-1B?
So, Joe, if I can just circle back to Scott Besson for a moment, can you please ask him if that's the case and there's no second place, why then are we selling NVIDIA chips to China? I just have to ask that. Going back to the H-1B visas, you know, I think the problem is that we want to use what has long been our most important strength, and that is the fact that so many of us are either immigrants or the children or the grandchildren of immigrants. And when you say it is going to cost $100,000 to come in on one of these visas, that is a whole scale switch from where we've been in multitudes that I can't even count because I'm no mathematician, but it's a lot of money. So yes, if companies want to pay that on behalf of workers, great. But you should not make our system one in which you can only come in if you are wealthy or beholden to wealthy people. We should be bringing in and supporting the best and the brightest in the world, if indeed we want to win this competition against China and other parts of the world that Scott Besson is talking about. So many of these things just don't seem to add up if you're talking about competing with China. You know who's welcoming people without this kind of cost? China. So we should be doing the same.
Really interesting point, Jeannie. This case is being led, by the way, from Massachusetts Attorney General Andrea Campbell and California AG Rob Bonta, who put out a statement, Rick, that says, as the world's fourth largest economy, California knows that when skilled talent from around the world joins our workforce, it drives our state forward. The Trump administration thinks it can raise costs on a whim, but the law says otherwise. Can the president do this?
It's a little sketchy. Again, executive action doesn't have the impact if they actually ran a bill through Congress where they amended the H-1B visa program and made it a statute. It'd be ironclad. Again, I think we're just tripping over ourselves as a party by not really instilling these ideas into some kind of, hard legislative agenda that will become the rule of law rather than the whim of the presidency. And look, I mean, remember, nobody gets in on an H-1B visa who isn't sponsored by a company that's going to already have them hired and put them to work. Right. It's not like you just wander into the United States and go looking for a job if you're a computer engineer. And so, it's a little more structured than I think Jeannie wants to portray. But at the end of the day, it does limit the people who can pay for this to the Jensen Huangs, because not everybody can afford an extra $100,000 on top of what they're already going to pay somebody like this. So I do think it's an unfair advantage for very wealthy trillion-dollar companies when you talk about the distribution of this kind of talent into the United States.
You could just buy a Trump gold card, Jeannie. We didn't talk about this. The administration debuted the website Wednesday. It's online right now, opening up applications for the gold card, which is basically an expedited visa here. If you pay $1 million, makes $100,000 sound pretty cheap, doesn't it?
It absolutely does. Again, you're going to make the talent coming in here be beholden to the wealthiest billionaires, and the president, of course, as the polls show, he's comfortable there. That's where he lives. He doesn't understand why people feel like they're suffering economically. But the reality is not that for most people in the United States and certainly around the world. And no, I'm not thinking that people are wandering into the country, but the reality is you want to make companies who are building not have to spend $100,000 to bring talent in.
Great analysis, as always, from our signature panel. Jeannie Shanzano, Rick Davis. They'll be back on the late edition of Balance of Power. Thank you both. I'm Joe Matthew in Washington. This is Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Stocks are lower across the board. Techs are tumbling. We begin with NASDAQ down 287 points.
All right,
now,
guys. So it looks like we're
1.2%.
pushing
The NASDAQ
sideways. So I'm
100
just going to
index
see
down
if we get a short
1.4%.
signal, and then I'll
S&P
go ahead and
extending
participate
losses
in
down
that
54,
if
down
it
0.8 tenths of
comes.
1%. Yesterday,
I'm
you
just
recall,
waiting.
The S&P had been at a record. Today, the Dow down 158, a drop of 0.3%. The Mag 7 index down 0.5%. The 10-year 4.18%. The 2-year 3.52%, and right now the 30-year.
We have a red forecast cloud now on the NQ, but the EMAs are nowhere near crossing yet. So
a retreat for silver down 2.5%, 61.94 the ounce. West Texas Intermediate crude oil down 0.1%. WTI 57.53 a barrel, and Bitcoin down 2.5%, $90,600 on Bitcoin. Among retailers with earnings out last night, we did hear from Lululemon Athletica. The stock today up by 10%. Also reporting last night was Costco. Costco shares down now by 1.2%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. The Friday edition, wrapping up the week. Back we go to Washington once again. Your host, here he is, Joe Matthew.
All right, Charlie Pellet, thank you so much. And pass the hot sauce. As Nathan Dean likes to say at Bloomberg Intelligence, there's hot sauce on the pot stocks today. And if you've been listening to Charlie, you know why. A report in the Washington Post getting us back around this idea of President Trump warming up to weed. Must have gotten a call from Roger Stone. Trump seeks to cut restrictions on marijuana through planned order. This is rescheduling we're talking about here, and it's something that a lot of folks expected during the campaign. Maybe not so much after the president took office. This is, by the way, an idea that was pursued by the Biden administration. Never ended up happening, as the president now is expected to direct agencies to reclassify marijuana as a Schedule III drug, similar to common painkillers. It is currently in the same class as heroin. And this would not legalize marijuana, but it would allow cannabis companies to see the light of day and potentially use a bank. Would also mean a different tax status, and that's why we're seeing these stocks take off. We thought we'd dial up Nathan Dean to get his take on this. Of course, at Bloomberg Intelligence, our senior U.S. policy analyst who's fielding calls on this all the time because, as you can tell us, Nathan, welcome back. Cannabis investors are passionate and very active, and they have been waiting for good news for a long time. But Lucy keeps pulling the football. Is this actually going to happen?
You know, that's the number one question we got this morning from the clients is this for real now? And what we're telling our clients is that, look, you know, yes, these equities have hot sauce, lots of volatility. MSOS is up 38%. But really, I think what we need to do is see what happens with this order, because the president does not have the authority to unilaterally reclassify it from Schedule 1 to Schedule 3. What I think the order is going to say is that it's going to direct the Department of Justice and the DEA to restart this process of rulemaking change. Now, they're about 70% of the way through, so, I mean, obviously it's not going to be that long. But if the DOJ comes out and says, right, we're going to do this on a speedier method, meaning we're going to forego a hearing, we're just going to move straight to the rulemaking process, they can get this done by the first half of next year. The question, though, is what is going to be in that order? Because obviously, if that order just says I'm going to deem it valid and therefore it's Schedule 3 today, then that's going to have court challenges and uncertainty still reigns.
What's the DEA think about this? Because I thought the tension was coming from within the administration last time we spoke.
Yeah, and it still is. I mean, so obviously we've heard anecdotally that the DEA is not, the staff there is not really on board with this idea. That was prevalent during the Biden administration. We saw no reason why it would change under the Trump administration. In fact, the administrator of the DEA, Terrence Cole, has a 30-year history of fighting marijuana, and he didn't really seem to be that on board with the idea. You know, the Washington Post report even talks about how Speaker Johnson tried to rebut some of President Trump's arguments here. So what we're telling our clients is that, look, even if reschedulization goes forward, it's not legalization. It doesn't lead to increased market share for these companies. What it does is it changes the tax code, something called 280E. So rather than paying a 40% tax rate, you're down to around 10 to 15%. So that's obviously good for those companies. But, you know, this resistance still remains, and that's why we're at a 30% chance of legalization. And that is what would prohibit market share growth, organic growth, everything like that. This is really just about tax.
Okay, this is good to understand and not to conflate with
Order
the Safe
submitted.
Banking Act, right? Was I correct
I'm going to
about
sit
that? Or
here.
these
I'm
companies
okay
would
if it
still not
bloops
be
up
able
and
to use
gets me. I got plenty of
banking
time to get
services?
out.
Yeah, that's correct. I mean, under the Safer Banking
Understood.
Act, banks would be able to service marijuana businesses. But our theory on that is until it's legislatively changed at the federal level, meaning until the drug is federally legalized, banks, especially the big banks, the publicly traded
Order
banks, they're not going
submitted.
to touch marijuana because you're going to be afraid of running into the Bank Secrecy Act or anti-money laundering. And honestly, the revenues just isn't there for the risk. So for these companies, there's two things for market participants to keep in mind. One is the tax issue, and the second is there's a lot of retail sentiment in this hot sauce right now. If you look at the Canadian pot equities, they're also up 30%, and this largely doesn't apply to them. So there's a lot of folks out here saying, you know what, this is good, but just keep in mind there's a lot of retail sentiment here as well.
Well, and that's important because you pointed out MSOS. That's the Advisor Shares Pure U.S. Cannabis ETF, because a lot of these other ETFs fold in, to your point, Canadian companies, right, or tobacco companies, a lot of different grow companies. I think you find a lot of different stuff that you might not expect. For instance, in the MJ ETF, is this what your clients are looking at? Is this what our audience should be tracking?
Yeah, I mean, honestly, what the reschedulization does is that it really opens up the mom and pop aspect for marijuana. So think of like the mom and pop farms in Oklahoma and Colorado and so forth. Those are the businesses that this is really geared towards. Now, the reason why it's positive for the bigger companies is because we do anticipate that there's going to be significant consolidation in this industry as incrementally things get better and better and better in terms of the legality of the drug. This is not an easy business to be in right now. And so as you get more of a regulatory framework, usually it's the big players that gobble up the smaller players, and then they are the ones that have the technology spend, the compliance spend, the legal spend that can deal with these regulations. So if President Trump does reclassify this, let's just say middle of next year, the tax relief will be there for the 2026 tax season in 2027, and then you will start to see, I think, some consolidation amongst the bigger players gobbling up the smaller players. But again, it doesn't really change the idea in terms of organic market share growth or anything like that. It just really just changes the finances of the system.
All right, makes a lot of sense. MSOS is the ticker as we spend time with Nathan Dean, backed by his iconic image of Stumpy at the Tidal Basin in Washington. There's got to be some connection here for a plant that grows freely from the earth, Nathan Dean. I want to ask you while you're with us about crypto, because you're out with the 2026 Outlook, U.S. crypto policy on Bloomberg Intelligence. To what extent will this industry and this investment class evolve in the new year?
So 2026 is going to be a tremendous year for crypto, and there's really three things to keep in mind. One is stablecoins. Now, the FDIC and the Fed, they're expected to release a proposal almost, I think, within the next week or so, implementing the Genius Act. This is the first of two proposals we think are coming. This is more about applications and registration, not all that exciting, but at the end of the year, stablecoin issuers are going to have a regulatory framework. You have the SEC and the CFTC moving forward with Project Crypto, taking off the enforcement risk, allowing these companies to innovate without the fear of that regulatory albatross hanging around their neck. And then you have the House and Senate discussions for this broader crypto market structure bill. Yes, there was a little bit of hiccup this week, but I do stand by our call that we do think that there's a 70% chance of this passing in the first half of next year, which would then give additional regulatory clarity for companies like Coinbase and Robinhood.
Pretty big deal. Watching crypto today, a little bit lower. We're down 2.5% on Bitcoin. Nathan, thank you so much. Have a great weekend. Nathan Dean at Bloomberg Intelligence with smart analysis on weed and crypto. We'll pursue the latter now with an important conversation that I've been looking forward to. Nathan McCauley. We go from one Nathan to another. The CEO and co-founder of Anchorage Digital, which you may not have heard of, but you should know about. Anchorage is the first federally regulated crypto bank in the country. Nathan, welcome. It's great to have you as part of our conversation on Bloomberg TV and radio. Are you getting what you need from Washington? And what do you expect in the new year?
Listen, first of all, it's wonderful to be here. Thanks so much for having me on the show. We are absolutely getting what we need from Washington. Genius Act passed earlier this year, which created the federal regulatory framework for stablecoins. Since then, we have announced 4 partnerships with stablecoin issuers, including the stablecoin giant
All right.
Tether that is going to be working with us to issue their U.S. version of their stablecoin. So the Genius Act has just been incredible. Really excited for market structure, which is coming next, which will lay the groundwork for how to think about
Order
trading,
filled.
securities, and the whole
All right, I'm
landscape
filled on the
across,
ES.
the digital asset ecosystem.
Well, this is really interesting. To what extent has this changed the
Target
crypto
filled.
landscape?
Got one in the bank.
As we see stablecoin usage increase dramatically following the legislation that's passed, and some have suggested that it has turned investors away from Bitcoin, from Ethereum, from other tokens. Do you see that happening?
No, I see quite the opposite. I see that among institutional investors that are looking at the digital asset ecosystem, their conviction in Bitcoin as a store of value is only growing. We're seeing an incredible amount of inflows into our custody system from institutional investors looking to invest in digital assets. In fact, now all of the large ETFs in the country are now utilizing Anchorage Digital as a custodian, listed on all of their S1s. But even further than that, what we're seeing is as stablecoins grow, stablecoins are not going to be competitive with the blockchains. In fact, they are going to be using the blockchains. So I think one of the biggest benefactors of the stablecoin trend is going to be the
Target
chains
filled.
themselves.
2 in the bank.
Ethereum, Solana, and the other chains where these stablecoins settle and live are going to see a lot more growth there. So I think it's an accelerant both for the stablecoin ecosystem and for the entire ecosystem at large.
Well, that's really interesting, and I appreciate you describing that at a time, of course, where we've seen some real volatility in crypto, and specifically, my gosh, what we've seen in Bitcoin and Ethereum specifically over the past couple of weeks has prompted a lot of concern. And we've had people on this program, Nathan, suggest that we could be going into another crypto winter. What would you say to them?
The way that I think about it is that these are assets that are best measured in decades in terms of their investment thesis. Thinking about your entry price for assets can definitely be something to think about. But as Bitcoin grows as a store of value on a global basis, as we have smart contract languages like Ethereum and Solana that have a kind of a long run track record here. I think what we see among our institutional investors is that long-term time horizon, 10, 20, 30 years, being the thing that matters, and a little bit less focus on, say, the cyclical sine wave that is the crypto bear and bull cycles.
Talk to me about security, secure usage, ensuring the fact that these assets are not used for criminal enterprise, as Senator Elizabeth Warren frequently warns. We hear this conversation a lot in hearings in Washington, D.C. What do you have to think?
Sure. So I think there's a couple ways to think about that. The first one is software security considerations. Can you hold the assets and keep them secure and safe? My company, Anchorage Digital, operates a national bank where we hold assets for institutional investors. And the primary thing we provide to them is security, safekeeping of their assets. And so we've developed a ton of security procedures, and that's really well appreciated and is really central to any investment thesis in the crypto assets, is thinking about the security of your assets. The second part of your question is around, what do we think about how stable coins and other assets are used on a global scale?
Yeah.
As I mentioned, we operate as a national bank, so we completely comply with all federal regulations around BSA, AML, sanctions, and all of that. And so I think in many ways we have proven that it is possible to operate like that and to operate.
All right, we're just waiting to see what we do out of the zone.
Completely within the regulatory perimeter of the laws and regulations of the United States.
Well, in our remaining moment, Nathan, what does your charter mean for the rest of the industry? Will we see more banks like yours and create a new class of banking?
I hope so. So we are the first and as yet only operational federally chartered digital asset bank. But I expect that we are the first of many. The way I like to say it is that there used to be such a thing as internet companies. Now that is just called a company. And we are a crypto bank, and I think there one day will come in the U.S. where every bank will be a crypto bank. And so we are one of one at this point, but I look forward to be one of 4,000, and we look to help enable all the rest of the banks to come into this space. And so looking forward to even more adoption there within the banking industry.
I appreciate your being with us. He's the co-founder, CEO of Anchorage Digital. Nathan McCauley with us on Bloomberg. Thank you, sir, for the insights. I'll meet you back here on the late edition of Balance of Power. And we could have news from the White House as the president is set to tangle with reporters about an hour from now. Much more to follow as Bloomberg Business Week Daily kicks off here. We'll have a look at the market straight ahead, and I'll meet you back here at 5 p.m. This is Bloomberg.
Petroleum Azer. Fighting to connect here. Damn. All right. I'm in the ES right now. I'm on confirmation candle on the NQ. All right. All right, I got to make a call. I'll be right back.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody. Yes, indeed. It is TGIF Friday, December 12th. Why do I have December 11th in the script? Why am I always a day off?
I can't.
Do you know what's up with that?
That's above my pay grade.
Man.
I'm not qualified to make that assessment.
All right, can we get the doctors on that? Because there's something going on, I think.
Well, it's the 12th. It's better than Friday the 13th, Carol. And that's where we are.
Triskaidekaphobia.
Yeah, well, look at this. The NASDAQ 100 off its worst levels today, but still down 1.7%.
Maybe it's Friday the 13th in the NASDAQ trade.
Okay. Well, there is a rebalance later today, so.
Maybe.
You know. The S&P 500 down 1%. We're going to have much more from Charlie Pellet in just a minute. He's going to give us all the details.
Yes, indeed. We're going to get off. No. We're going to get to that in just a moment. We're going to get into that sell-off when it comes to, it feels like, AI winners, because that is dragging down the overall trade. Hey, we also did get that disappointing sales outlook from chipmaker Broadcom that's weighing on rivals, fueling some of those investor anxieties about that AI bet. And then we also have some mixed messaging from Fed officials. So, yeah, you know what that means? Michael McKee sitting right next to me because we got to, pressure's on you, Mike, in just a moment.
All right, we're going to get to Mike in just a minute. In the meantime, what to take note of when it comes to the Fed speak and, of course, Broadcom's results as well.
Yeah, let's not forget, too, we're going to get a read on the C-suite. We've also got Stephanie Gill, Chief Investment Officer at Robinhood Markets. She's going to talk about flows, volume, and on that vantage point from the C-suite, we've got the CFO of UiPath. That stock has been on a tear this year. So we see what they have to say. He's got an AI angle as well.
All right, looking forward to that over the next hour. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Thank you very much. Indeed, got to begin with Oracle. Stock is down 3.9% right now. Earlier, we reported that Oracle had pushed back the completion dates for some data centers that it is developing for OpenAI to 2028 from 2027. That, according to sources. But right now, we have got an Oracle spokesperson providing an update saying the company remains confident in its ability to meet its obligations and future expansion plans, and that there have been no delays to any sites required to meet its contractual commitments. Again, Oracle shares trading lower now by 3.8%. We're looking at a down Friday right now, on track for a losing week on the S&P 500 index, the Dow, the S&P, NASDAQ, they're all in the red. S&P 500 index trading lower by 1%, 68 points lower at 68.32. Yesterday, you recall the S&P was at a record. The Dow down 220 now, down 0.5. NASDAQ down 1.5%. NASDAQ 100 index after Broadcom earnings down 1.7%. Broadcom, by the way, down 11.2%. 10-year 4.18% with the 2-year 3.52%, and the 30-year 4.85%. Gold up $11 the ounce now, $42.91, up by about 0.3%. West Texas Intermediate crude oil down 0.1%, 57.52 a barrel, and Bitcoin just above $90,000, but Bitcoin today down now by just about 2.9%. Keeping an eye on those pot stocks right now. We have got shares of a number of those companies advancing, surging right now. Let's begin with the ETF. MJ on the ticker, the Amplify Alternative Harvest ETF. It is up now by just about 37%. Tilray up 39%, and Canopy Growth up by 51% right now. Sources tell Bloomberg President Trump is expected to direct his administration to move to reclassify marijuana as a less dangerous drug. Recapping, S&P down 70, drop there of 1%. And for on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. We're going to talk more about Oracle in our next block. In the meantime, we want to get to, we're still thinking about Fed because it's definitely playing out in the trade today. Fed officials, including 2 who will become voting members next year, offered strongly opposing views earlier today on what to do with interest rates, Tim. Continuing a debate that will grip the U.S. Central Bank into the new year. I am imagining that it's going to be a spirited conversation around the table there at the U.S. Central Bank.
Holiday dinner.
Yeah.
I like that.
Yeah. Exactly.
With us on All Things Fed and more, Bloomberg TV and radio international economics and policy correspondent Michael McKee joins us here in the Bloomberg Business Week studio. So Goolsbee cites the need for more data in a dissenting vote. Hammack says she prefers slightly more restrictive rates. Schmid cites too high inflation as reason for dissent. We're hearing from
some of the dissenters. What's the collective voice that we got today?
A collective voice was dissent. These were mostly the people who opposed the idea of cutting rates farther. The interesting thing about Jeff Schmidt, the Kansas City Fed Bank president, and Austin Goolsbee from Chicago, was they both tied it to visiting their constituents.
So the anecdotes.
The anecdotes being out in the districts and having people tell them that prices are their major issue and that they are really concerned about inflation. And as Goolsbee put it, we just can't assume that inflation is going to be transitory.
Okay, so you make a really good point about consumer behavior and inflation expectations. What does it mean for the way a consumer behaves if they're worried about inflation?
Well, in theory, you would spend more money today, but that's not necessarily what's happening. It's more that people's decision-making will be affected by the idea that they think prices are going to be higher. So they may or may not spend, and the economy slows down, and the Fed, if inflation is higher, is going to be raising interest rates, not cutting interest rates. Now, there's still a minority on the Fed, but it's a growing minority. And as you mentioned, Beth Hammack is going to be a voter next year. Now, Goolsbee and Schmidt they're done voting for this round, but Beth Hammack is going to be voting next year, and she's definitely in the hawk camp.
Mike, we've done some reporting. Bloomberg News has put out some stories about K-shaped economy, but really talking about which consumer matters most to the U.S. economy, and they tend to point to the higher end consumer. So are they feeling the inflationary pinch as well?
No, not really. I mean, I thought the most important consumer was you, but
don't tell my husband.
When you go shopping, yeah. No, the people who have enough money spend just on what you would call discretionary. They're not worried about grocery prices and things like that. And those people are the ones that are holding up. Those people are the ones that are going to the luxury brands and still spending a lot of money. But the lowest quintile and maybe the lowest two quintiles, they're the ones who are clipping coupons or cutting back or switching from, everybody switched away from steak to chicken, but they're switching to other products that are cheaper because they're having trouble making ends meet. And Jay Powell made a point that is not incorrect. It's not so much that inflation is accelerating too much. It's only at about 3%, but that people are just used to, they're comparing to what we saw before the pandemic, and prices are high now, and they're not feeling that their wages kept up.
I guess my point is, like, there's a social conversation. We've had it many times that this is not an economy where everyone benefits equally, right? And we know that. But I guess what I'm trying to say, if we just put on the economic hats, as you do so well, is it that the higher end consumer in terms of the U.S. economy is a lot more important? So that we care from an economic perspective what they are doing, that's more important.
Well,
again, I'm not. I'm taking my heart out of the equation.
There are fewer people in the highest quintile or in the highest decile, and so if the rest of America decides to pack it in and the economy goes into recession, then everybody
all right,
loses.
we got a little bit of a trade going on the ES. I didn't get into the trade on the NQ.
And they start firing people, then that spreads. And as you see today, the stock market's going down.
I wish I would have, to be honest with you. I was going to get in earlier, and I should have.
This is it. Maybe it's not. But at some point, the stock market goes down, and then even the wealthy people stop spending. They've got the money, but it's the wealth effect, the idea that I'm going to have the money to pay this bill when it comes in the door.
Before we let you go, just pushing ahead to next week, we get some data, housing starts, new home sales on Monday, November payrolls on Tuesday jobs day.
Tuesday jobs day.
What are you expecting? What are we expecting?
Very confusing jobs report.
Well, first of all, the fact that it's on a Tuesday, you think you have trouble with the date today?
It's already confusing.
Well, we're going to get this all the way into the new year. It's going to be 2026 everywhere except the Bureau of Labor Statistics. They are combining the October and November numbers, but the October numbers will only have jobs created, and it may not have the entire data set.
So do we just throw it out?
We won't get an unemployment report. No, but they couldn't collect it.
Oh, okay.
So we don't get the household side, which tells you what the unemployment rate is and things like that. And then we get the November numbers, which will get both sides of the report, but it may not be complete it may not be a 100% or close to 100% participation rate because they had to start late. So the Fed's going to look at this and say, this is interesting and it's good news, but the real issue is wait for the December numbers that come out January 9th.
Yeah, just it's like crazy, right? Until everything gets reset and back on track.
Yeah.
And that'll be hopefully in the new year.
When will that be?
I don't know. But we'll certainly be continuing to lean on you. Mike, thank you so much. Michael McKee, Bloomberg TV and Radio, international economics and policy correspondent right here in studio. Let's broaden out a little bit and let's get into maybe investors, how they've been reacting since we got that Fed decision and what we are seeing with investment flows and what's going on in terms of activity.
For that, we turn to Stephanie Gill, Chief Investment Officer over at Robinhood Markets. She joins us here in the Bloomberg Business Week studio. Stephanie, I wanted to start with what's happening on the Robinhood platform because you certainly have a certain segment of the investing population. What are you seeing on Robinhood right now?
We're seeing still net buying, but it's been more muted, I'd say, than it was before. And it's been in some of the things that have been going down or had, like Netflix, for example. You've also seen where there's been sales, it's been more in the AI-oriented names. So I've kind of shared this before, but our customers tend to hold core positions and trade around them, meaning they buy when they go down and sell when they go up. But we're seeing a little bit differently where there seem to be like being more subjective about what they're investing in. And that's why I say like it was kind of interesting to see NVIDIA being sold and, you know, things that are kind of under pressure.
So selling rather than selling as they have gone up a lot and taking some profits, they're selling as they're going down.
Yeah, but they probably have embedded profits because they've held them all year. So I think that's like kind of giving up a little bit on the AI trade for now.
Well, like I totally get it. Like, you know, Tim and I were talking about Oracle. Like it is still up almost 14% year to date, but we've seen a more than 40% decline from some of the, when it hit a record back in September, excuse me. So, I mean, how much can you dig deeper into the data in terms of what you're seeing? Is it Mag 7 names that people are getting out of? Is it all tech? Is it just AI related? Like, what are you seeing?
It's just the AI related that I've seen, and then some of the like CoreWeave, you know, those kind of names are
the
like
neo cloud
names.
names.
Exactly. You've also seen some buying in just broad-based ETFs and some T-bill oriented ones that like kind of make me feel like diversification, you know, kind of parking things rather than trying to pick.
So less playing the market and more like long-term diversified index funds?
I think for now, usually we see that activity when there's a big dip, like they go into ETFs first and then they play the differences in names.
How are they playing this? I don't want to call it a crypto winter yet, but we're down another 3% on Bitcoin, hovering around $90,000 per Bitcoin right now. How's that played out over the last couple of weeks?
In the stocks, I've seen actually some buying in like the MicroStrategy names, but on the crypto side, I've actually seen more selling than buying.
Interesting.
Yeah.
So instead of actually holding the patterns that you're seeing, instead of actually holding the cryptocurrency, people are instead putting money into the proxies or the hoarders.
Yeah. I mean, if you can make that relationship, I kind of look at two different dashboards, like crypto versus. But I did think it was interesting to see buying into the equity related.
Yeah, because certainly strategy has had its own set of challenges. Okay, so let's back out a little bit and talk big macro picture right now. We haven't had a chance to speak to you in a few weeks, and given what we heard from Jay Powell, what we just heard from Mike McKee about different views of the economy coming from different people, where do you sit?
I think the economy is okay, actually. Like, I think this is totally anecdotal, but my feeling is that like New York City is busy, travel is a lot. Like, I actually think the consumer is generally okay. That being said, the lower end consumer is still not doing well, and I don't think they've been doing well for a while. So I do think things got overvalued market-wise. So I do, and I also think that the Fed is caught between a rock and a hard place because you do have this explosive growth.
Hey, Bashfield, how you doing?
The AI trade, growth in credit markets, and so they have to kind of worry about that being overblown.
I think I'll keep my one little contract on.
Increased inflation, obviously we don't know what's going to happen with tariffs, but that's creating an issue.
All right.
Then
You got through all the days and everything?
Still struggling. So it makes me think of like Europe post 2008.
All right, man.
About, like,
good job.
Versus Germany. And so that's why I think there's so much of a debate within the Fed. And, you know, Powell did say, like, don't even look at the data that's going to come out next week.
Yeah, I get what you're saying.
Yeah.
Yes.
Just take the payout, man.
And I worry
Take the
about the
payout.
quality of it too, like in general. So.
Get money in the bank. Once you got money in the bank, it makes it real,
we can look at the S&P 500, the major industry groups, and see what really
Yeah,
did
it is.
well or didn't do.
It's 1,000% about that.
Services names, 31%
Once you
higher,
start cutting
information
corners and start
23%.
getting
So
funny
even
and thinking
though,
you're going to
I mean,
front run
the Mac 7,
things,
even if
and
we start to see,
it
you
starts
know,
to fall
pullbacks on
apart
some of
pretty
these names
quick.
or the AI trade, still
Yeah.
outperforming. Industrials up almost 20%. Financials up 13%. I'm looking at the S&P Composite Pharmaceuticals Index. It's up almost 21%.
Finally now, yeah.
Yeah, finally, exactly. So I'm just curious, what else can you dig deeper in a year where we've talked so much about AI, we've talked about rare earths, we have seen some, you know, M&A activity going on. What is it that you have also seen that are interesting, and you can get an idea of what investors are interested in and what they are not interested in?
I've been bottom fishing. Like we've been, you know, I sorted like the Russell 1000 into, you know, top and bottom players, and it just felt like there was a rotation that started on October 29th, which was when we had that like 6% pullback. And a lot of those names, like of the top 100, the ones that are up the most, 100 most this year, 41 of them are in a negative return since October 29th. So we've been kind of looking around being like, where is there still growth? And I actually think like the other thing we've been doing this year is
You doing a 50K or are you doing a bigger one?
because we do think like what the Trump administration is doing is important to understand. And I think the consumer is going to be more important for them this year, or coming into next year, I should say. And so we've been looking more in like the retail space of players that are interesting. And so
retailers, which have been reporting.
And brand names in retail, like On Holding, Lululemon, like they're down, you know, they're down double digits this year, or maybe not on after yesterday, but
Lulu is for sure.
Yes, there is down 50%. It's up 10% or so today, and so we just think like there is value to be found there.
I should have been in the NQ on this one. I'm kind of pissed at myself.
On Lulu, for example, doesn't a lot of that depend on who the next CEO of the company is, and they don't even know who that's going to be yet.
There's execution risk there now for the CEO, with obviously the change in the CEO. But I think it lost some shine on its brand, and I think they have done a lot to try to turn that around. And you've seen that in Gap this year, which is also like, I think they're further into that journey. But I think it actually creates an opportunity.
Yeah, Gap's been doing really well of late.
Yeah, it's now up about 11% year to date. But your point is, right, that if the consumer feels better and is out there spending, if we get more juice in terms of the way of stimulus, you know, whether you believe it's the right strategy or not, if there's more money in the pocket of consumers.
Try not to invest my heart.
I know. It's going to go somewhere. And so there are names that will certainly benefit. Great stuff. Love digging deep into your platform. Stephanie Gill, she's Chief Investment Officer at Robinhood Markets, joining us right here on Bloomberg Business Week Daily. On a day where we are seeing, Tim, stocks under pressure, down 1.8% on that NASDAQ 100.
Yeah, but off our worst levels of the day. The S&P 500 down 1% right now. The Dow down just half a percentage point.
All right, when we come back, we've got a couple of tech stories we want to dig a little bit deeper into, including Oracle pushing back on AI data centers. Or are they? Because they're pushing back.
They're pushing back on the pushback.
They are.
Also, Broadcom taking the stocks with it. Our tech roundup, that's coming up next on Bloomberg Business Week Daily.
What's up, Lord Titty? How you doing, man? Yeah, the internet here was fading in and out. They're doing some work on a new development down the road, and I think they were working on the Lurker sent you it's along. is Lurker still mad at me? Tell him I love Canada. Tell him I'll sing the Canadian national anthem drinking a bottle of maple syrup if he wants me to. Tell him I love him too. Oh, Canada. We love you, Canada. We love Quebec. We love Ontario. We love Manitoba, Alberta, British Columbia. We love maple syrup and hockey. On live? What do you mean on live? I'm getting FOMO because I should be in the NQ also. I love Maple Leafs. And going to the casino in Montreal. Ayo, ayo, ayo. Is he gonna come back or is he gonna be mad forever? I wasn't being serious about anything. I think he just took things the wrong way.
Long here at Bloomberg, we are looking at losses right now for the Dow, the S&P, and NASDAQ, with the S&P 500 index down 75, now at 68.25. That is a drop of 1.1%. Dow Industrials down 252, down 0.5%. NASDAQ down 377, drop there of 1.6%. The NASDAQ 100 index down 1.8%. Oracle down 4.6%. Broadcom after earnings down now by 11.5%. We've got the 10-year currently yielding 4.18% with the 2-year 3.52%. The 30-year 4.85%.
I'm going to move down.
Gold up $15 the ounce, $42.95, up by about 0.4%. West Texas Intermediate crude oil flat on the day, $57.50 a barrel. And Bitcoin now down 2.8%. Of Bitcoin is at 90,250. After earnings, shares of
I am live. I'm on live. I'm on live now.
Shares of Costco after earnings down 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master along with Tim Stanovic live here in our Bloomberg New York studio. Hey, we're keeping a watch on Oracle. Stock lost about 11% in yesterday's trade, down another 4.6% in today's trade. We did have a redhead crossing the Bloomberg earlier today, and that headline talked about Oracle pushing back the completion dates for some of the company's data centers that it's developing for the artificial intelligence model developer OpenAI, pushing it back to 2028 from 2027, according to people familiar with the work. At the same time, Oracle has come out, though, and they're pushing back on that. So we wanted to get into it with Bloomberg News technology reporter Brody Ford. He's joining us here in studio. First of all, we know Oracle has commented on this, and they're saying they're pushing back. Tell us, though, what you guys found out, what you found out.
Right. Yeah, Oracle is saying that we have a huge contract with OpenAI. That's, 4.5 gigawatts. They're on the hook to develop data centers larger than have ever been done and in a shorter time frame. They're saying that we're going to be able to deliver on our contracts and deliver on our expansions, right? What we reported today is that it's hard to build data centers. They're already seeing some delays, right? Yeah. And we're seeing this across the industry, that companies that are very good at software are getting involved in this business of standing up big data centers, but finding that there are some physical issues, right? You can't find enough labor. You can't find enough electricians in Texas. You can't find enough electrical infrastructure. So what we're seeing is that the company is on the hook to do some very big things with infrastructure, and it's going to be maybe a little tougher than it seemed at first.
So it has nothing to do with demand or changes.
How you doing today, Hercules? You got anything on?
And challenges with all the supply that you talked about.
By all metrics today, demand is insatiable, right? I mean, if you went to OpenAI and said, hey, we have 100 of the largest data centers and we'll sell them to you right now, they'll probably sign the paper, right? So today, the demand for AI compute is through the roof. What a lot of folks on Wall Street are getting a little more anxious about is that in the long term, how much does this stick around, you know?
So let's broaden this conversation out a little bit because you have a big takeout today, just crossed for Bloomberg Business Week. It's written along with Drake Bennett, and it dives into a question that Carol and I have really been talking about for, gosh, I think probably 3 months at this point.
At least,
since that last Oracle earnings report.
You can't forget it.
Yeah, you can't forget that one. And that's why Oracle has turned into this poster child for whatever some investors are calling.
I missed this whole move on the NQ.
Why is Oracle in that position?
I can't believe I didn't make myself get in.
They're so levered.
It's all about that.
Oracle is one of the world's great cash creating machines. Its database software it's fueling this room, it's fueling many corporate rooms, and Oracle said that, hey,
yeah, I'm in on the ES, but the accounts I'm working on the NQ, I wanted the volume over there more.
Where the jury is still out is that a good business to be in?
So, when we talk about AI, the spend, for such a long time, Brody, it was about NVIDIA and their chips.
Yep.
Where is Oracle exactly? Like, what is it that they are providing and what they are doing?
Yep, good question. So they buy a ton of NVIDIA chips, rent out some data centers, put the two together, and then sell that capacity to somebody like OpenAI. And that's making it sound simpler than it is because there's a lot of logistical work that goes in there, but they're effectively a project manager. They're the quarterback of getting all this stuff together between the real estate developers, the chip makers, and the customer.
So why do people want to work with them, and rather than just do it on their own directly? Because we do know, right? The hyperscalers, a lot of them are just kind of doing it on their own, right? Or are they not?
Well,
Oracle is definitely
trying to become a hyperscaler. They're trying to become, Microsoft built its own AI.
$1,600 trade if I close it now. I want to see if we break this level here, though. I think if we break this level, I can get my target.
Serve all types of workloads, but where's the opportunity?
So I'm just going to give it a chance to do
There was
that.
a period in September where Oracle shares surged 47%. In just a matter of a couple of days, thanks to a robust earnings report, a robust outlook, and then announcing some big deals. Since then, it's down about 42%. What was the catalyst that got investors to think differently and then also price these credit default swaps the way they've been priced?
Oracle's been trying to get into the cloud infrastructure game for years, and for a long time, they were kind of made fun of. They weren't taken seriously. What's changed so much lately is they got this massive booking with OpenAI, $300 billion in commitments. And so that's when in September we saw the stock go crazy. And what happened after that is OpenAI went around town and kept signing commitments with everybody else. And it led investors to say, okay, can they actually pay these bills?
What is a commitment? What does that mean?
A commitment
that's what investors were questioning. Well, if OpenAI is making all these commitments, can they actually follow through? With these commitments?
Is Oracle gonna?
Yeah, it's a pretty easy trade, man. I never even took any heat on it.
I feel like
I should when it hit the ES, I should have just marketed in on the NQ because
they weren't profitable, blah blah blah, and then all of a sudden it was like
the NQ was lagging a little.
Brody, don't go anywhere. I want to bring in our Onion King. He's Bloomberg News.
Are you in the long?
Reporter, because
you're calling the long. All right, I'm going to tighten up. Then I don't want to give more back than I have
to. We've been looking at what's going on with shares of Broadcom specifically because we've seen this stock really take a big beating. I just want to pull it up on my Bloomberg here, and you've got shares of Broadcom. They're down.
All right, you're long. All right, I believe
session. So hovering near their lows of the session. It's a company, a chip, a company, I guess that you could say that is really
out
with NVIDIA when it comes to AI computing revenue.
1462 guys. Oh, nice.
Ian, the stock's getting really
Eric Keel's caught the.
Having said that, if I look at the year,
Eric Keel's caught the bottom.
Almost 55%. So the quarter, what we got from Broadcom, not so bad, but was it just expectations are so high right now?
I mean, the numbers were fantastic. Obviously, compared to where they were a year ago, they're doing
So I'm
really
up
well. But
1462 on the ES
AI
contract.
companies, if there's a through line between, Broadcom and Oracle the day before, it's that where is all of this coming from, right? Yesterday, Broadcom talked about huge orders from Anthropic. There was also some confusion about what kind of business it's doing with OpenAI, like Oracle. So I think, any uncertainty, anything that isn't, fantastic and immediately supported.
Yeah, I don't think the short is over on the longer time frame, but just be careful, Eric Heels.
In the past few months, we've also talked about this idea that Google.
Tell Lurker I still love him if he reaches out.
A decade that can kind of
I love you, Lurker.
When it comes to inference, at least to
we miss
what
having him.
Is doing, and we saw shares of Alphabet move higher as a result of that. Remind us of the relationship Broadcom has with the companies that are trying to take on NVIDIA.
Yeah,
Eric Heels is half out. Nice trade,
I mean,
man.
think of,
Really nice trade.
Broadcom as like
Stop setting profit. All right, Eric Heels has got him a money trade. Half out already.
You go to an architect. The architect
Money trade.
The blueprint that then you take to the builder, which in this case would be TSMC, and they create the chip. So anybody
I wonder how
that's
far up we
wanting
go.
to make their own chip that would be potentially a rival for NVIDIA's GPUs tends to go through Broadcom and say, help me out with
I got to be careful because I got a little bit of FOMO for the NQ.
a benchmark for how well these efforts that these individuals.
Yeah, let's go, man.
Like Google, like Microsoft, like
hold on,
AWS
I'll find it.
Are in terms of their roadmap towards competing directly and replacing what NVIDIA does.
So it makes sense that Alphabet, Apple, and Meta Platforms are among the biggest customers of Broadcom.
It totally makes sense. Ian, I feel like, we've had this conversation with you about Intel, once the chip king, and no more. NVIDIA, the chip king, although it looks like even there has been a little pecking away at some of the narrative around
2500's
that
good, man.
company. I mean, is there enough to go around, or are we likely to see some things maybe change, even in the fortunes of a company like NVIDIA? Or does it look like what you're hearing in terms of orders and
is it
AI
livid?
build, that it's still going to be a company that everybody's going after?
No.
I mean, back to what
X
I think
dot
Brody
livid?
just said, which
Yeah.
is right now there is no
Dot
evidence
X?
of a slowdown. There's no evidence
X dot livid dot X, is that
things
him?
that we're overbuilding, that there isn't a fundamental demand to support all of this investment. That doesn't mean that we won't get there or get there soon. When that will happen, we don't seem to know right now. What is, I think, a growing uncertainty is that who is paying for it? Even though these companies have got
everybody has
fantastic growth
different
in terms of
ones.
viewer numbers, is that reflected in revenue? Is that reflected in profitability? And I think for this to have a continuing surge along the same lines that we're seeing, we have to see more of that coming in. We have to see more profit dollars being shown to the world rather than just profit dollars of those who are basically being paid to build the systems.
That's a big thing I heard a lot too when thinking about Oracle's success, because effectively for Oracle to be successful, OpenAI has to be, and for OpenAI to be successful, it can't just be ChatGPT. It can't just be a couple of hit AI products. All of this spending is premised on something that's truly transformational, that really redefines a lot of industries, saves a ton of money, and it's like the level, that would be like the internet level, right? And we are just not, we don't have a line of sight there yet.
Right, that's exactly what we're trying to figure out. And if that is the promise, then there are some serious structural issues with the way the economy is laid out right now. I mean, so many unknowns, Brody, that people are concerned about. And we even look at the what David
I'm not
said
sure.
today on
I'm not sure what his
TV
stuff is on
Caroline,
Discord.
that
I'm trying to
there are
find
a lot
where
of
he
people who are
posted. but-
concerned about losing jobs as a result of AI, but he cited a Yale study that he said
Is it x.livid.x?
we haven't seen a loss in jobs correlate with the introduction of ChatGPT. So it's not. He argues that it's not materializing right now.
Yeah, I mean, I think that's true. I think we've all used these tools, right?
Let's see what we got here. We got the short happening again. Yeah, that's what I was afraid of.
You know, they've been around long enough.
All right, I don't want to get
cycles. And 2 years ago, there were a lot of promises made that haven't happened
me.
yet. Now,
I'm in.
Tools, they're used a lot, and they are transforming some industries. But for all this to pay off,
Earn to Pirate. I don't know the fact that earlier we were below 1%, then we went up only to go back down to stay below. Tells me there's further downside.
On what is going on in 2026.
Yeah, I'm kind of.
Are you comfortable with that? Is that him being very honest and just?
Let's go 1%, stay there. Downside movements. Yeah, I'm kind of feeling the downside movement, but I don't want to get. I don't want to get too froggy on the NQ and start breaking my rules.
With that. In the past, we like Hawk and his directness. There were a lot of questions and a lot of seeking clarity yesterday, and people came away with that not entirely sure when this money is going to come in.
And that's why you're seeing the price really tank in today's session. Gentlemen, thank you so much. Bloomberg News U.S. semiconductor reporter Ian King, and of course, our own tech reporter Brody Ford joining us right here in studio. All right, coming up, a view from the C-suite.
I kind of wanted to get back in. I wanted to get in on this on the NQ. I got to start. Well, I don't want to start breaking my rules. It gets out of control once you start breaking rules. up, Hogwarts? What's up? Yeah. Yeah, I'm glad you took your profits, man. You always got to take them down. I got one good trade while you were gone on the ES. That was a short. I got the short up here. I went short up here off the signal.
Bloomberg, that rotation out of tech stocks gaining momentum this afternoon after disappointing earnings from Broadcom and anxiety about Oracle's data centers renews worries about the AI trade. Right now we got Oracle down 4.5%, Broadcom after earnings down 11.4%. Bottom line here, tech stocks selling off. NASDAQ 100 index down 1.8%. NASDAQ Composite Index down 1.6%. S&P keeping it all in context. That is down 1%. Dow Industrials down 0.5%. 10-year 4.19%.
It was pretty clean.
Gold right now
it was a pretty clean signal.
0.4%.
I never took any heat on it either.
West Texas Intermediate crude 57.44 a barrel down 0.3%. Bitcoin down 2.9%. 90,221 on a Bitcoin. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, RBC Capital Markets.
Hey, Bonsai. Bonsai.
Bonsai. Earnings in OneNote.
So,
RBC.
You see where the EMAs cross inside the red cloud? You track it here in the box on the left.
Also known as NNARR.
Bonsai.
They also cited stabilization.
If you want to read how it works, you can go to the About page in the Twitch, and you can read the one that's how to read the forecast box, and you can go to Discord and find it in the beginner's guide.
So far this year, 12% of the float is shorted. Also with us here in the Bloomberg Business Week,
and it'll tell you how to read this when the signal comes and what to look and as it goes. That was a signal right there. I got the whole short, made 14.
An application software company, robotics, automation.
I think we're not done being short, to be honest with you, but I don't know where I want to get in or what I want to risk. It's 2:45 now.
And where do you fit?
Yeah, thanks so much for having me. For those who don't know UiPath is an AI-powered platform that helps businesses and enterprises transform their enterprise processes and organizations.
Bonsai. I see signal, but at what price and time you entered? Well, this is the cross candle. I actually entered up. I put my. I had my thing up here. I entered right about 48, 40. Actually, I can probably show you right here.
We have 10,800 customers.
I sold at 48, 68.49.
To healthcare, to the U.S. federal government.
I sold at 68.49.
Over 100 countries. The reason
68.29 was the one I got out last on.
Every enterprise of almost any scale does in terms of taking away mundane work to yield for a more productive workforce.
I don't know, man. I'm just reading the chart. The chart right now says we're probably going lower.
So tell me,
honestly,
I'm okay. I'm really okay with it.
I don't.
Give me just in 30 seconds.
I mean, I don't know.
Of a company that you work with and what you do for them.
Yeah.
Yeah. So Carol, Voya Financial, just as an example, is a large-scale bank in the United States. We're working with them to automate their everything from HR operations, such as employee onboarding, to financial processes. If you step back and look at almost any enterprise that's there, think about something as mundane as procure to pay, where you're receiving invoices, entering them into systems, then moving that data that you're entering into systems, doing reconciliations. That work can be done by software and does not need to be done for the hours that people are putting into it. You take something like that as a simple example, but then you can go and you look at a Fortune 10 healthcare company that we work with. All of their claims
25,261
gets touched by.
Oh, are you long?
Entering data, analyzing.
Are you short?
Data,
did you go short off the slow?
Providing reasoning to allow for decisions to be made. Those are two examples.
Short.
Just wondering, Ashim, in your finance organization, are you using it there too?
Huge. When you look at
Oh
UiPath has
yeah,
scaled
yeah, I can see that happening.
from
Kip Trick
almost zero
or
revenue in
Hogwarts.
2017 to
I'm
over
looking at your
$1.8
chart.
billion
Yeah, I can
of
see how that can
ARR to
build.
where we are today.
I
Within
mean, I
Apple
don't have a
Finance
signal to do
department,
anything
the
now. I'm
cost of
out. I just missed
advertisers,
the
we
NQ
employ
short.
our
I'm
own
just pissed I
software.
missed the
So
NQ
we have
short, to
not
be
had to
honest.
add people net to our company in many years. We've been
Up
able
then
to
down,
achieve
yeah.
that
I
scale
can see
both
that.
geographically
I'm just waiting.
as well as from a
I'm
revenue
waiting to see if I can
perspective
get one more
using
signal today,
automation.
but I don't think it's going to
And that's
happen.
not unique to us. That is something that a lot of our customers benefit from.
Lord Titty got himself 15, 20 points. That's huge. Nice job, man.
So much of a narrative and
Yeah, quick
conversation going
250.
around AI,
Quick
what
250
it's
in the
going to do with
bank.
labor market.
250 in the
It
bank.
sounds like you haven't had to hire people.
250,
Reality
250,
check,
250 in
are a
the
lot of companies
bank.
going to be able to not hire people or even
If
let
it does
people go
sweep
because of
lows.
what AI or agentic AI is going to be able to do for them?
Yeah, let me make a small nuance here.
Okay.
We've hired people just in the places that provide higher return in terms of revenue or higher paces of innovation. So in our minds, companies should be hiring and people will continuing to work, but it's going to be
If it does
working
sweep
in
lows,
higher skilled
I might open
areas
up some weekly
and
puts
areas
to
that have a
see sell
higher return to the
on
enterprise.
SoFi or
Whether
something.
that is working
My stop
interactively
loss
with
was tight. You
customers
couldn't even see
or
light through
whether
the
that
tight hole.
is on pace for designing
I
the
like it.
next feat
There's
of
nothing better than
innovation
tight
to bring
stops
to
when
the
you're in a
market
winner,
over the
right,
next
Lord
couple
Titty?
years. So this isn't about
I love it.
hiring less, it's about hiring
Nothing
where
better
we
than tight
want to.
stops when you got a
And
winner
all
on the
of that
books.
translates to ROI.
Ashim, just wondering, we've seen a lot of concerns in recent weeks, specifically in November, among investors around AI and whether what we're currently seeing is leading us into a bubble at some point. If you look at your bookings for next year, like what does that look like? And what's the feedback that you're getting from clients if they're thinking about their spending plans for next year?
Yeah, look, I think what our customers feel is they feel a variable macroeconomic environment, I think like all of us do. And, a lot of times what we all discuss in our various forums, whether that's formal or informal, what I can tell you is what's encouraging is customers want to spend. The key area is they're not going to spend unless they see ROI. So as we're looking at our demand funnel, we launched our agentic platform, bringing agents and AI infused automations to enterprises earlier this year. If you go back to maybe 2016, 2017, 2018, there were innovation funds that you could go and say, hey, let me go and spend $2 million and just experiment. I think experimental funds are moving down, but there's a lot of funds available that for projects and areas that yield ROI. So once we launched our platform, the demand for proof of concepts and pilots really we're super encouraged by. Even in the first 5 to 6 months, more than 700 of our 10,800 customers, these companies are going and building agents on our platform and figuring out where are the highest ROI areas. So there's a lot of activity, and I think funding will follow activity so long as that there is ROI that is there. And that's what gives us a lot of confidence and optimism as we look into the years ahead for UiPath.
Ashim, very briefly, very interested in the work that you do for governments in the U.S. and around the world. How do you characterize that work? Like, what do you do for them?
Yeah, buyers are
And
not
also,
being
how
very
big
aggressive
of a
yet, are they?
business is that for UiPath?
Yeah, so the public sector is it's greater than 10% of our revenue base just globally. That was as of 2 years ago. We haven't disclosed figures since then, but it's, I would imagine it's in a similar vein here. I can represent that.
You still got your green burn to pirate?
The U.S. government, it's everything from, from areas of agencies that are in high paper network. They use our software to actually scan, read, and extract data so they can process things fast. There are partners that we work with the government that are taking papers that are sitting in caves and in parking lots, trailers and trailers of them, and digitizing them as a part of their digital transformation. Getting audit compliance across the government, which involves retrieving documents and processing different areas for auditors and business teams, that is a key area that we can look at. But we're across every agency that is there. What I'd say is we've gotten super close to the government over these last years. We've continued to have a great relationship with them. And just like enterprises, what's encouraging is they're looking for high ROI, high impact
I know it's hanging around, huh?
Areas to deploy
We
our
got the green forecast cloud now on the NQ. ES is really strong.
So we can continue
ES hasn't given up the
Ashim Gupta,
selling volume
CFO
yet.
and COO
Selling
of
volume
Path
outnumbers
joining us,
buying on the
from
ES
afar.
still.
And of course, right here in studio, Nina Tretman, Bloomberg News senior editor. She writes the CFO Briefing newsletter, which you can subscribe to at bloomberg.com/CFO Briefing. You get a new one every Sunday.
And Ashim will be featured in an upcoming edition of the Bloomberg CFO Briefing newsletter. Also, for more
Don't do it.
coverage of CFOs,
Don't do it.
You got to check out Chief Future Officer, the series from Bloomberg. The newest episode premieres next week. It features the CFO and COO of Hasbro. That's Gina Getter. Watch next Wednesday at 9:30 New York time. This is Bloomberg
Break even on my
Business
runner is 250. Wow. Entered 261 at 250, added at 250, then sold at 240. Yeah, we need to drop. I don't know, man. It's starting to look a little pumpy. I believed you. That's why I got out.
You're listening to Bloomberg Business Week Daily with Carol Masser and Tim Stennebeck on Bloomberg Radio and Television.
All right, everybody. We are coming up on the last hour of trading on this Friday and also for the week overall. Let me just pull up my market boards. And right now, we're off our lows of the session, still down about 1% on the S&P 500. NASDAQ 100 still down about 1.8%. We've really seen a pullback on the trade when it comes to kind of almost anything related to AI. So that's where we're kind of ending up on this Friday, which has been a jam-packed week.
It has.
Again.
You actually even thought it was Friday the 11th, but it's Friday the 12th.
Yeah, I'm having trouble with that. Gotta check my calendar.
If we take a look at how stocks have shaped up this week, as we do get to an hour left in equity trading, down 0.6% on the S&P 500, the NASDAQ Composite down 1.5% this week. The Dow, though, Carol, up more than 1.1%.
Yeah, that I think has been interesting, the rotation, which says maybe, again, out of maybe some of the momentum trade and then into some other less loved parts of the market. It's just kind of interesting to see that. I'm Carol Masser, along with Tim Stenovic. Let's get to some stocks on the move on this Friday. With us to do that is Bloomberg cross-asset reporter Denitsa Sokova in the house, and we're going to start with Oracle.
All right, how we doing? I'm writing a deal, guys. I'm going back and forth, working leads.
Past month, and it's really shaken the whole AI trade. We see the Nasdaq is down today, the S&P is down today, and a lot of it came after the news that Oracle has pushed back the completion dates for some data centers that is developing for OpenAI. Initially, they were going to be in 2027. Now the date they have is 2028. The ticker, of course, is ORCL. The stock is down about 4.5%, but it's extending a 40% slump since September. There has been a lot of activity in their CDS. Investors have been growing pretty jittery about Oracle in specific, because that's a company that's obviously spending a lot of money. Oracle has been working to deliver 300 billion contract to supply the computing power necessary to train open AI models. Capital expenditure, we recently got a report from them, came at about 12 billion in the quarter. That's an increase of 8.5 billion. So this is a number investors have been worried about. It is more than analysts were expecting. They, of course, expected high spending anyway. But this is even higher, and you can understand why some of the jitters are appearing. And, of course, circularity of deals. It's always the same names, and Oracle is there.
Okay, well, speaking of the same names, let's go to Broadcom, a chip architect that works with some of the companies that are trying to take on NVIDIA.
Yeah, and that was a big winner. The company was up 75% before the sell-off. We're seeing now big drawdown today. Shares were down more than 11%, approaching a 12% drop. The most intraday since January. The sales outlook failed to meet investors' expectation. The ticker is AVGO. It really happened after some unsettling commentary yesterday from their CEO that said the company has a 73 billion in AI product orders backlog. He later tried to suit investors and said that that figure was a minimum, but nevertheless, we're seeing a really big sell-off, and the combination of Oracle and Broadcom is really dragging tech stocks down. Investors were seeking more clarity on when and how the company will get a payoff from AI, but instead they didn't even get a forecast for AI revenue for 2026. So, the worries are there. We saw some good numbers. Sales will be about 19 billion in the first fiscal quarter, which is more.
Ian King said that it was a really good quarter for Broadcom.
The report was good, but no one is looking at what's happening now. Everyone is looking at the outlook, and any small disappointment, it happens a massive loss. Two-digit drop on a day. It's just incredible.
So if you don't like the AI trade, just go out and buy some yoga pants.
Yeah, that's
If it's a range, I play the range. I don't care. I adjust the way I take profit if I'm with or against the trend. Yeah, I get that.
The yoga wear maker boosted its full-year outlook and announced that its chief executive officer would step down. There has been a lot of competition. There are so many brands that offer $100 yoga pants, and Lululemon has kind of taken the back seat for some time. There is Alo, Nike even has like a Skims partnership, and those have been very popular. We're seeing some positive results in Lululemon after a pretty tough few years. Lululemon's fiscal third quarter report had several positive signs. Profit and comparable sales is something analysts are pointing that there is some optimism there. The company has been pushing to improve their products and to increase their allure. They have some new fun things that have been working, but nevertheless, the company is down 50% before today's rally. So it's been a tough year, but people are looking forward to more yoga pants and more optimism in that area.
I want to live my whole world in a pair of yoga pants. Sometimes that's what I'm wearing in the studio. Just throw on a jacket and wear some yoga pants.
I'm going to talk about Chip Wilson. He's the Lululemon founder. He blasted the company's board after its leadership changes. He said the directors failed on succession planning and allowed what he calls significant value erosion under CEO Calvin McDonald. He's making his voice heard as a huge shareholder.
I sold and got back in.
It's
sold.
A higher end product. It's not inexpensive. You don't often see sales at Lululemon. We'll have to figure out. There's a lot more competition in that space.
Don't forget about your quarterly $75 credit, girl.
I just signed up on Amex.
So you guys thinking we're really going long, huh?
All right. Good stuff. Denitsa, thanks so much. Hey, check out our Stock Movers podcast, 5-minute episodes of the biggest winners and losers in the stock market. You can find it on Apple, Spotify, or anywhere you get your podcasts.
We're actually going to be speaking about what's going on at Lululemon with Bloomberg Intelligence's senior analyst for e-commerce and athleisure, Poonam Goyal. She's going to join us at the top of our show on Bloomberg Business Week Daily I want to know what names are being floated.
Yeah, I do too. Also, we're going to get into the astronomical cost of defeating any foreign aerial attack. We are talking the Golden Dome. This is an incredible story. That's all ahead. If you're watching on TV, the close is coming your way. We continue on radio.
I'm short. Until I'm over the 370 area, I'm short, but I am not going to play the range when I see a range.
This is CBS News on the Hour, sponsored by O'Reilly Auto Parts.
Christopher Cruz in Washington. Some members of Congress are trying to find a way to keep health insurance premiums for more than 20 million people from more than doubling next month. Congresswoman Alexandria Ocasio-Cortez.
People are going to die, and I don't understand why they can't just extend these subsidies so that we can save people's lives while they figure out whatever their political food fight is.
CBS's Caitlin Huey-Burns.
The two sides are very much at odds, but what we are watching heading into next week is the Senate bills failed yesterday, but the House is supposed to take up legislation next week. They are saying that they're putting forward a package of bills related to the costs of health care. We don't yet know exactly what that looks like.
Some House Democrats today released 19 photos from the estate of Jeffrey Epstein showing him near Donald Trump, among others. CBS's Ed O'Keefe says the White House is not pleased.
This White House and Republicans writ large have accused the Democrats on the committee of cherry-picking pieces.
No one likes to hold for 30 minutes. Yeah, I like to hold longer if I can get the right entries.
Republican Congressman Thomas Massey says the Justice Department has to release all of its Epstein files in a week.
It's a crime if they don't. It's not like they're in contempt of Congress because they didn't respond to a subpoena. This is a new law with criminal implications if they don't follow it.
A former Michigan football coach has been charged with stalking and home invasion.
I'm Peter King. Sharon Moore has been formally charged after appearing virtually in court. He's accused of repeatedly calling and texting a woman against her will, then going to her home. Prosecutors say he terrorized her and threatened to kill himself with kitchen scissors and butter knives. Moore's attorney says he's not a threat to anyone. The judge has granted his release on $25,000 bond. He'll have to wear a GPS device, stay in Michigan, and stay away from the woman he's accused of stalking. Peter King, CBS News.
In Washington state, more than a dozen rivers have overflowed their banks. CBS's Carter Evans is in Mount Vernon, due north of Seattle.
Even though most of the rivers have already crested, it's going to be till tomorrow at least before they recede below flood levels.
Preservationists have sued President Trump over his ballroom project. Here's CBS's Linda Kenyon.
The first major lawsuit has been filed by the National Trust for Historic Preservation. It names President Trump and others, including Interior Secretary Doug Burgum. The lawsuit argues the administration failed to undergo legally required reviews or receive congressional authorization for the project. The president had said the ballroom would be near but not touching the White House structure, then later demolish the entire East Wing.
On Wall Street, less than an hour before the close of the trading week, the Dow is down almost 0.5%. This is CBS News.
All right, I got about 20 minutes in order to get an entry on, or I'm going to be done for the week, guys. It's been a pretty good week. Can't really complain. Yeah, on the NQ, if I get a long signal, if I get a solid long signal, I'm gonna take it, but it's got to happen in the next 15 minutes, or I'm gonna close down and I got a Zoom call. Hey, Hey, Algo. How you doing, buddy? Hey, did you see my green on the ES trade?
41-year-old skier
Did you see my green over here?
Downhill course at St. Moritz, Switzerland. Look at the time. Lindsey Vonn now. He's absolutely flying. History in the making.
How'd you do today, Algo?
Downhill event, her first victory in nearly 8 years, and her first with titanium implants in her right knee. Vaughn called it an amazing day.
I have a Zoom call for a team meeting at 3:30. I got to do.
Winter Games in Italy. Steve Kathan, CBS.
Oh yeah, yes, I did. Want to send out the intervention. All right. All right. I don't think it's coming anyway. I don't think we got enough time for a clean call anyway. I'm pretty happy with this trade.
Tried to destabilize and influence Germany's federal election in February. Russia is calling the accusations absurd.
I do have a little FOMO because I didn't get in on the NQ on the same trade, and I should have.
Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenovec. Live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
All right, everybody, we are 55 minutes away from the closing bell on this Friday. Happy Friday, man.
I didn't say this yesterday.
Let's watch the NQ.
Now. It's a really special time at
If I'm going to take a trade, it's going to be on the NQ. I'm not. There's no way though it's going to cross on the upside. I'm not taking a short. The only way is if it crossed and we made a run, and that ain't going to happen today. No way.
It's courtesy of my mom. We grew up watching my mom bake and helping her.
But I started here 5 years ago during the pandemic. And I heard for years about these legendary cookies and how do you get on Carol Mass? It's like being on Tom Cruise's coconut cake list.
Aww.
Like, how do you get on Carol Masser's?
Masses?
What?
How long
what's
have we
your
been
name again?
together?
What's your name again? How do you get on her cookie list?
No.
You definitely need it. You're trying to blow his greens.
I didn't. No, I was like,
I'm not addicted. I'm probably the least addicted person on this
Yeah,
place.
I haven't done it in a while because we used to bake together. I had a sister here, and we'd all get together and we'd bake.
I do have FOMO because I did want to, because that was a super easy trade, man. That was a super easy trade. I should have followed in with the NQ, and it took off before I got in.
And so now I travel to go bake with her, and it's a whole big family.
Yesterday, Carol brought in pounds and pounds of like 6 or 7 different cookies. They were delicious. I'm sorry that
oh shit, here we go.
Gets to eat them, but you treated our newsroom to them, and thank you very much.
I love our newsroom. I love all. Everybody works really hard.
It's really good.
Yeah. Well, I'm glad. Everybody's a little drunk on the.
There was alcohol in one of them. Yeah, there was.
All right. We got more important things to. No, that was really sweet. That was super sweet. All right. So what are we doing? We're going to talk a little bit more about Lululemon because it's been under pressure for a while, but it is, Tim, the top performer in both the S&P 500 and NASDAQ 100.
Yeah, we're going to talk a lot about that stock today. Also, the astronomical cost of defeating any foreign aerial attack. We're talking about the Golden Dome and the hefty price tag.
The changing in how we fight war is pretty unbelievable. Maybe we should just get rid of war altogether. Oh, okay. I'll get off my soapbox. Business of sports, between the rise of prediction markets and NASCAR, Michael Jordan's racing team selling an antitrust suit. There's a lot to talk about, as there always is when it comes to the world of and business of sports. We've got a superstar roundtable that's coming your way in our 4 o'clock hour.
Well, speaking of superstars, one is standing by in our Bloomberg International. Bloomberg Interactive Brokers Studio.
Apparently he's been hitting the amaretto balls
I was going to say, Charlie Pellet is standing by right now for a business flash.
Thank you very much. And here's what's going on. We got 53 minutes to go ahead of the closing bell. Red on the screen right now with the Dow, the S&P, NASDAQ. 70-point drop on the S&P 500 index. A rotation out of tech. Gaining momentum after disappointing earnings from Broadcom. Also anxiety over Oracle. Broadcom right now down 12%. Oracle down 4.5%. S&P down 1%.
Yeah, no, that was it. No.
NASDAQ 100 index down
it's a fun slogan, right? It's a fun slogan.
Small cap shares also lower. That index down 1.3%.
The ES is about to fire, man.
By 0.4%.
Hey, man.
10-year 4.19%.
It's about the fire, man. The same thing's going to happen. ES is going to go, and NQ is going to lag and then go.
43.02 on the precious metal. West Texas Intermediate crude down.
I'm not going to take a trade on the ES, so.
37 a barrel. And Bitcoin.
Yeah, one of us will get it.
Right now, Bitcoin 90,100.
I don't know, man.
On Bitcoin. Artificial intelligence.
I got about 10 minutes if I'm going to enter.
Questions about the outlook for AI spending. Seema Shah is Chief Global Strategist.
I don't think so.
Principal Asset Management.
Yeah, well, that's the thing, you know, man. It may blast straight off this 50 EMA right here. If it blasts down off this 50 EMA, then it's not ready for sure.
But increasingly, it depends on which company you're starting to look at.
ES is in a long right now. ES. This is how the short happened. ES. Oh, no. It's in the control EMA candle on the ES.
4.5%. I'm Charlie Pellet. Thank you for the cookies, and that's a Bloomberg Business Flash.
You're welcome.
I'm not going to mess with that.
I had nothing to do with them. I just ate them. Thanks so much for that update, Charlie. Appreciate it. Bloomberg Business Week is brought to you by Harvard Business School Executive Education, a world-class learning experience for aspiring and established change makers. Prepare for the next elevation for your organization and for yourself. Learn more at hbs.me/breakthrough.
All right, let's get to a stock Charlie's been talking about, we've been talking about. We're talking about Lululemon. Stock is the #1 gainer in both the S&P 500, NASDAQ 100, up just shy of 12%. Even so, the stock is still down 45% year to date. We did see the stock rally after the company boosted its full-year outlook and announced, Tim, that its CEO would step down.
The company searching for a replacement for Calvin McDonald, who will depart the top post at the end of January. Poonam Goyal is Bloomberg Intelligence Senior Analyst for E-commerce and Athleisure. She joins us from New Jersey. So first of all, were you as surprised by the market as the market was by this move?
You know, I kind of expected a move similar to this because Lululemon has just not been performing well, right? So when you have instances in retail where there's just no point of understanding how they're going to turn this business around when it takes a longer time, there is usually some sort of management change. So this was, in my mind, a little overdue.
Oh, it's starting to weaken.
It'll be interesting to see on who fills these shoes.
50 EMA can be a powerful indicator.
Around in the vision that they put forward.
So on that, who do you think, like, what are some names that are being bandied about the analyst community right now?
You know, names I don't know about.
I got 8 minutes, then I'm going to sign off, guys, and get ready for my meeting.
I would like to see a product-led leader because at the
yeah, there was someone in here that kept talking about it. I don't remember who it was.
Back in play.
I've never tried the tick chart. I might have looked at it a few times and it just wasn't for me, you know.
You know, it's interesting. First
long
of all, the
time ago.
Page of Lululemon, and under management, there's no names there right now, which I don't know. Is there something wrong with my screen, or like, I don't
but
often?
To your point, how often is it that we see a CEO exited without a plan for a new one?
Yeah, exactly.
That was a big deal yesterday.
So that's a good point, Poonam. You say it's long overdue, and so like, why isn't it that they internally or the board didn't say this ain't working? Because he's been there for a few years now. So why did it take them so long, or did they not give him enough time to figure it out? Calvin McDonald, we're talking about.
So he's been with Lululemon for 7 years, I think since 2018.
Right.
So he's had a fair amount of time there. When he came on board, the excitement was, you know, all about the personal care. I remember us talking about it, where will they enter this business that has 70, 80% margins, and it would be so great. And I'd say during the pandemic, things were working great, right? For not just them, for anyone who had activewear. That is how people dressed. That was the movement. It was to be healthy. It was to be out. It was to work out and really lounge at home while you're working. So what happened post-pandemic? And that's really where we kind of think about, what did the leadership do to stay ahead of trends? Yeah. And I think as we exited the pandemic, we didn't see as much innovation as we would have liked, because you saw competitors like
I like
Aloe,
watching the 5-second chart. Gives me anxiety. I can't. I don't like the really short time frames like that.
And took mind share and wallet share of the shopper. So that just brought us to question, do we need vision from a leader that has the product background to really drive a product-led recovery? And keep in mind, over the last 2 years, Lululemon has had several leaders leave the company. So there has been turnover.
You know, it's interesting. You go back to, I forgot about that when he came in. His background, I mean, he had been president and CEO of Sephora USA for 5 years, right? So the expectation was
and Sears, I think, before that, right?
And Sears before that. But the Sephora thing I find interesting because people kind of love that model. I mean, was the hope, right, that he was going to bring actual products, right? Like whether and which do have incredibly high margins, whether it's, I don't know, was it skincare? Like what was it that they thought he was going to bring in?
So do you remember like the dry powder? You know, we all go work out and your hair is kind of sweaty and you're like, I'd love to just shake some dry powder and go away. So they added dry powder. They tried a deodorant. The thing is, with Sephora, you're not looking for performance in all your product. But when you move to an active
We're double
line, you need to
bottoming.
solve for performance.
That's why you wait for the signal,
that's
right,
not easily
Algo? No
done.
signal,
In
no
fact,
trade.
I
No
don't even
signal,
know
no
if there's a
trade.
product today out there that actually works to solve real performance issues. I think it's still a hole in the market.
It's called take
And
a
when the
shower. Go home and take a shower.
Yeah.
I mean, to be honest, like,
there's no.
I don't go work out and then like go out to dinner.
Yeah, and like, you know, maybe something for shoes. I don't know.
I don't know. Well, I don't know. If you're doing yoga, you're in bare feet.
Yeah, that's a good point.
You know, can I just say, like, I was thinking about the pair of yoga pants I wear all the time. It's Outdoor Voices.
Okay.
I bought them.
And that company's had its own share of different iterations.
Years ago, though, and it was because my daughter wanted something. And I'm like, these are really cool, but it was innovative because they had these side pockets, and I use them for traveling. I can throw my cell phone in and so on and so forth. So it's not been Lulu that I have picked up something.
Well, Poonam, come on in on the idea of brand value here, because Chip Wilson is a name we haven't mentioned in a few minutes. He's the founder of Lululemon. He's outspoken. Everybody remembers what happened when he was CEO of the company. He's out with a statement. He's got like a PR agency. He says, quote, "The erosion of premium brand value in the company's core markets demonstrates that the board does not understand its target customers anymore or what will drive shareholder value at Lululemon over the long term." He blasted them in this statement earlier this morning. Is that view widely held by analysts?
I think you can blame anyone right about now because Lululemon hasn't been able to perform as it did historically. But that said, you have to remember that the landscape has very quickly changed because everyone has access to consumers. Everyone has access to intelligence and data and technology. And you're leveling the playing field. Lululemon's brand still has great brand equity, don't get me wrong. It's still a very well-known and preferred brand, and its sales are very strong internationally, especially China, where many can't even get in and get it right. So I do give them credit for their international growth. I give them credit for men. I give them credit for digital. It's just when it comes to women, they just haven't had the innovation. I really think it's a product misstep. They need more innovation. They need a constant flow of new products that excite and delight the customer, and they haven't been able to do that well.
I agree with you. I've walked in and out of there, and I really do like the quality of their stuff. I think there is something to be said for that, but I agree with you, Poonam. I walk in and I'm like, kind of seen it all before, or I've got it already at home, and so I need something else. Chip Wilson, just real quickly, 30 seconds.
Hey, Lord Titty, you have a good night, man.
HDS function.
You have a good night. I'm going to sign off also, brother. But I'll see you on Monday. Hey, guys, we had a really good week here. A lot of good discipline, a lot of lessons learned. I feel really good about it, and I just want to let everybody know that I really do appreciate you hanging out with me while you're working. You know, working our plan B while we take care of business with plan A, and you know, trying to find a way to scrape a little extra off the top. Whales will never notice, and we'll put it in our pockets to help ourselves and our family. But everyone out there, have a good weekend. And Godspeed to you all.
Poonam,
have a good evening.
Have a great weekend.
Weatherman out.
She's Bloomberg Intelligence Senior Analyst for E-commerce and Athleisure. Been following this company, as you can tell, knows it inside and out for many years. All right, coming up next, the astronomical cost of the Golden Dome.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. 39 minutes to go ahead of the closing bell. 39 minutes until we wrap up what will likely be a losing week for the U.S. equity market. That rotation out of tech shares gaining momentum after disappointing earnings from Broadcom. Also anxiety about Oracle's data centers is renewing worries about the AI trade. For right now, we got the S&P down 71, down 1%. The Dow down 205, down 0.4. NASDAQ down 1.5%. The NASDAQ 100 index down 1.8%. And the Russell 2000 index of small cap shares down by 1.3%. 10-year at 4.19%. Spot gold now up $19 the ounce, $42.99, up 0.5%. West Texas Intermediate crude oil down 0.4%. WTI 57.39 a barrel. Bitcoin down 2.9%, 90,153 right now on a Bitcoin. Busy week, including a Fed meeting this week. Cam Dawson is Chief Investment Officer at New Edge Wealth. She was a guest on Bloomberg Intelligence and says, yes, there's a very wide range on the Fed about the odds of future rate cuts.
If you look at that 2026 distribution of dots, you could drive a Mack truck through it. It's something that's never been before seen. So very wide of this divergence between people expecting no cuts to all the way down at the very low end of getting down to that 2%, which means that there still is a lot of uncertainty. And we think, of course, and this is going to sound trite, but it really does depend on how the data progresses.
Cam Dawson of New Edge Wealth interviewed on Bloomberg Intelligence. After earnings, Lululemon Athletic, a stock we were just talking about, up 12.7%. Costco after earnings down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. Appreciate it. Well, a defense system that could defend the U.S. from the nuclear missile arsenals of Russia, China, and North Korea. It's the so-called Golden Dome, announced just days into President Trump's second administration. The president has said the project will cost about $175 billion, and it'll be completed by the end of his term in 2029. But defense experts say those targets are unrealistic. A Bloomberg analysis found the final price tag could reach many multiples of that. And Carol, the tech not even confirmed that could actually work.
I think what I find fascinating reminds me of like President Reagan and his Star Wars.
Which we talked about in like grade school as not working.
Right, exactly. Although you kind of understood where he's going, but this certainly feels like and is more of a reality.
Well, it's a Bloomberg big take and just a fantastic read. Joining us now is Sana Pashinker, Bloomberg News space reporter. Also, Wayne Sanders joins us. He's Bloomberg News, Bloomberg Intelligence senior defense analyst. Sana joins us from Washington, D.C. Wayne joins us from Maryland. First, Sana, I want to start with you. Carol said the whole concept reminds her of Star Wars during the Reagan administration, but explain exactly how the Golden Dome would work. The satellites, the missiles, what would happen?
Yeah, totally. So the Golden Dome is intended to be a multi-layered missile defense shield. So the way it would work is like, in the case of an attack from an adversary like Russia, North Korea, or China, a nuclear missile would first encounter a space-based layer of defense, which would include space-based missile interceptors, and that technology doesn't yet exist. But those are intended, those which were outlined in President Trump's executive order as a requirement of the Golden Dome, would attempt to counter the missile at the very first stage, which is in space. And then if they make it past that space-based layer of defense, there would be other layers of defense, including the high atmosphere and even on the ground, like using Patriot and THAAD batteries to intercept different types of missiles that could be launched from adversaries. So it's really like...
Go ahead. Sorry, I interrupted you.
Oh, I was just going to say, it's really like there's a net on every single level that is hoping to engage those missiles and destroy them before they land.
Cool. We're going to get to the astronomical price tag in just a minute with this, and also the how realistic a solution such as this is. But first, I want to bring in Wayne Sanders. He's Bloomberg Intelligence senior defense analyst. He joins us from Maryland. Wayne, as Sana and the team write in the piece, up to now, the strategy to prevent annihilation of the United States has really depended on deterrence, this idea of mutually assured destruction and nuclear deterrence. Why do we need to make a change there?
Well, I think the first really important piece is there is a lot that actually goes on within missile defense, ballistic missile defense within the United States that we already have. And one of the biggest, precursors to Golden Dome was really looking at it and saying, we have a lot of capability that is not interoperable. We have capabilities like Lockheed's Aegis Defense for the Navy. We've got ballistic missile defense of Guam, and we have the THAAD batteries that Sana brings up, as well as Patriot and PAC-3 interceptors. We have a lot of capability, but what we don't have is the ability to see all of those, to include the sensor layer that she brings up as well. We have tracking layers from ground as well as in the air, as well as in space. And so long-range discrimination radars, next-generation overhead persistent, all these different things. But what they don't do is all talk to the senior military leaders at the same time and say, I can see a launch coming from country X. It's going to take X amount of time to get to the U.S. or to one of our allies. You can shoot a hypersonic missile from mainland China and reach South Korea and Japan in 6 to 11 minutes. You can reach Australia in 15 minutes. That is a very quick turnaround in terms of trying to make a decision. And if you're only picking it up based off of one commander who happens to be in a submarine or a surface vessel that sees this, they've got to get that to the National Military Command Authority to make those decisions a lot faster.
Yeah, I think about, Wayne, all of the layers of this. And yes, there's missiles. And, I go back to my college days and we were talking about ICBMs and, deterrence and how that kind of changed warfare. But what I'm curious about, throwing drones into this, and this is a whole other kind of lower level. I just think about what's needed to protect ourselves against that, the cost, the implications. How does that even just kind of complicate or add to the cost of all of this?
Oh, absolutely. The layered defense that Sana brings up, absolutely 100%. You have exo-atmospheric. You think about those ICBM threats. You think about things that are going to go into space and come back down. We have to be able to reach those. But you also then have the drone swarm fight that is also out there, right? So part of the Pentagon's Replicator 1.0 and Replicator 2.0 initiative is being able to counter drones and then be able to add to our own arsenal. So when you look at $1 billion+ for drone development and counter UAS for the 2026 NDAA, a lot of that in the Golden Dome piece is really looking at high-powered microwaves. It's looking at high-energy laser technologies and, companies that are out there right now building these things so they can counter that threat, so that the strategic level capabilities, the expensive PAC-3s, right, $4 to $6 million to fire those Patriot and the PAC-3 interceptors. You don't want to do that against a $30,000 drone. So being able to put all these pieces together and make sure that you can identify the capability and shoot it down with the right thing.
Sana, come back in on this. All I can think about is the price tag. I've been to countries like Costa Rica where I think they spend nothing on military and what they can do in terms of education and healthcare and just different things. Yeah, it's just so. Talk to us about the cost, because I think, what was it back in October?
$175 billion is what the president said the project would cost.
Right.
Sorry, go ahead.
No, but what I was going to say is that we already have a budget deficit that's topping and logging a $1.8 trillion mark. What would something like Tim put out a number, what the president thinks? What did you guys find out? And can we afford to do this? I sound like my husband. Can we afford to do this?
Yeah, totally. So when we kind of estimated how much it would cost to defend against an all-out attack from the combined nuclear arsenals of Russia, China, and North Korea, so think worst-case scenario, the defense systems that we would need to really successfully counter that would cost about $1.1 trillion. So way more than what Trump is claiming as $175 billion, if you're adhering to the requirements that he's outlining in the executive order, which is that, this Golden Dome will protect against any foreign aerial attack. But a Golden Dome that protects a little bit less could be built more cheaply, even though that's not maybe exactly what he said in the executive order. So we also calculated the cost of a Golden Dome that could protect against an all-out attack from just one adversary like Russia. And we found that even that was still $844 billion. And, a lot of these costs are just from procuring the systems, and a lot of them don't even exist yet. Like I mentioned, space-based interceptors is something that President Trump specifically states in the executive order needs to be part of this Golden Dome, and that technology doesn't even exist yet. So you would need a lot of, research and development money as well, and we didn't even include that in our analysis. I think it's pretty well known that that's a potentially underestimate of what this would actually cost if it is built to what he's stating in the executive order.
Then how do you get that number, Sana, up to $1.1 trillion, this maximum risk scenario estimate? What does that calculate?
Yeah, so what we did is so the nuclear arsenal of Russia, North Korea, and China, those numbers of what missiles they have been published by the Defense Intelligence Agency. So what we did was we did analysis to kind of find out how many defense systems we would need to really protect against all of these missiles coming at the United States at once. We did that using a combination of Pentagon documents, prototype contracts, think tank estimates. And so we kind of compiled all these costs of all the defense systems, as well as the quantity of the defense systems needed to come up with this final number of 1.1 trillion.
All right. So, Wayne, we live in a world where we talk a lot about AI and, tech spend, and, you got to do upgrades on things. Like, this isn't a case of we build this dome and set it and forget it, right? Or help me out here. Are we going to constantly having to be doing kind of upgrades, improvements, and so on?
No, they're definitely going to require that. I think a lot of the AI integrators that you're already seeing, right? Even with one of the Golden Dome pieces early on was Palantir with SpaceX and saying, hey, we want to be able to play in this space as well during the bidding portion for Golden Dome. You're going to end up having to do that. So a lot of this also includes like cybersecurity, making sure that you have the open system architecture necessary to be able to provide the upgrades. But like Sana said too, is you also have to build the scalability. You're still going to come down to industrials. Mm-hmm. You have to build the satellites capable of doing this. You have to build the radars and the sensors to be able to meet that. And then you have to get to the interceptors point to be able to do that, right? You and I, we've had this conversation before. If you even take just the PAC-3 interceptors, right, that are using the Patriot system. Lockheed, they were at 550 per year that they build, and then they're up to 750 that they're hoping for 2026, 27. They're adding additional lines, so they're doing a great job of actually being able to reach some of the demand. But those are for ground-based Patriot systems.
Okay.
If you're now all of a sudden trying to add in, I need to create an interceptor capability, a space-based interceptor that's going to be in orbit, that's going to go on these satellites. You've got to build to that capacity as well. And then add on to all of that piece, right, is that AI integration. Every time that there is something new that China or Russia does, we have to be able to make sure that we can defend that in the cybersecurity arena for the satellite platforms themselves.
Wayne, we got to run, but just yes or no, does this happen by the end of President Trump's term?
No, phase one can happen where interoperability of all their stuff can happen. Space-based, no.
All right.
I thought you were going to ask if the ballroom was going to get done.
No, that's an easier. That's not in space.
Sana Pashankar and, of course, our Wayne Sanders. Thank you so much. Incredible story.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ not only lower but close to session lows. Let's head right over to the first word breaking news desk for today's afternoon call. Here she is, Jordan Fitzgerald.
Thanks, Charlie. Main U.S. averages are in the red amid bearish pressure on AI stocks. The S&P cash is down about 1.2%, with the NASDAQ down 2%. Taking a look at Dow stocks, McDonald's, Coca-Cola, and Boeing lead, with Caterpillar, NVIDIA, and Goldman in the red. Lululemon shares are holding gains after last night's earnings report, while Broadcom is set for its worst day since January on those numbers. Meanwhile, Oracle adding to yesterday's losses after a report that the company is delaying some OpenAI data centers from 2027 to 2028. And in U.S. politics, the Supreme Court has adjourned for the year without making a decision on Trump tariffs. It'll be at least January until we find out what's going to happen on that front. Wrapping things up, no major earnings expected after the bell. My name is Jordan Fitzgerald from the First Word Breaking News Desk. All yours, Charlie.
All right, we thank you very much, Jordan Fitzgerald. And to hear live breaking news over your Bloomberg, type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I've been driving all night, my hands wet on the wheel.
Come on, let's take a drive.
A drive?
Yeah, a drive.
Can you just focus on driving? Focus on the road.
Driving in your car.
Why would I drive fast?
Because I'm asking you to.
Just take your place in the driver's seat.
Just drive, baby.
Driver's seat.
This is the drive to the close.
Where we're going, we don't need roads.
On Bloomberg Radio.
All right, everybody, we're coming up on about 18 minutes to go until we wrap up the trade on this Friday. Carol Master, Tim Stanovec, live in our Bloomberg Interactive Brokers studio. You just heard from Charlie and Jordan breaking down the trade here, and you're still down about 1.2% on the S&P 500 as we get closer to that closing bell on Wall Street. And you're looking at a Dow that's down 278 points, down 0.6%. And Tim, right now the NASDAQ 100 down 2%. So we're definitely seeing those big cap tech names really taking it on the chin.
You know, today's an IPO day.
Is it?
Yeah, Wealthfront started trading.
Oh.
It's the robo-advisor
Oh my
fintech
gosh,
company.
yeah.
I think UBS was supposed to buy it a few years ago. It's now trading just up about 3.3%. Valued, though, at $2.1 billion.
Wow.
Making its debut today.
I didn't see that. Did it? What's it doing?
It's up 3.2%.
Oh, interesting.
Yeah, you could. It's not too late to add to one of your gainers. Maybe do an honorable mention at the end.
I am so overwhelmed with gainers today, courtesy of you.
Well, he's not a robo-advisor. He's a real person. We're talking about Andrew Cry. He's Chief Investment Officer at Crescent Grove Advisors. The firm has about $5 billion in assets under management. Andrew joins us from Milwaukee this afternoon. Andrew, good to have you on the program. Last time you were here with us in the studio, a lot has happened since then. And a lot of questions, I think, too, as we just heard from Jordan and from Charlie, about where we are or are not when it comes to AI spend and an AI bubble. How are you looking at that in the context of the trade?
Yeah, everybody wants to know where this AI theme is going, and also great to be with you. So I think from our perspective, the risk going forward is that so much is in the price at this point, right? You've got such a sort of perfect outlook that's being priced into these companies at this point. And in particular, take a company like Oracle, where you're seeing more debt funding come into play, as opposed to some of the other Mag 7 members that are largely funding their spending out of free cash flow. You introduce sort of a unique element to that specific stock, but ultimately, people are saying, can they deliver on the promise, the productivity gains, ultimately the earnings, the return on invested capital, all this money that's being sunk into this theme? Can we see that produce something of value? And if not, then I think these valuations are probably a little bit hard to justify. So it's data point by data point, sort of case by case as you look at it, but that's certainly top of mind as you move into 2026.
When clients come to you, and I know it's long term, and it's about
And they say, I want to go back in time. I want you to put all my money in NVIDIA 10 years ago.
No. Yeah, exactly, right? Or buy Bitcoin 10 years ago. Where do they want to put money? And I understand everybody's got their own individual goals, and a lot of it's about maintaining wealth, not only growing it. But so I'm just curious, what is it that they ask you most about when it comes to different trends, narratives, investment plays?
I think right now what we've heard a lot from clients is just this uncomfortable sense about this rally, since Liberation Day, kind of off the April lows, that it just feels uncomfortable for some reason. You get a lot of talk about all-time highs and do we pull back with our equity allocations, and certainly we're not opposed to taking some chips off the table, and in particular thinking about where do we rotate to find relative value across markets. And I think one of the big themes as we look out into next year and talk about within equities in particular that have done so well, sort of the growthy side of equities, these mega cap tech names, taking chips off the table there, which would be the first order effects of AI and the theme that we're talking about here with this outsized performance that we've seen from the Mag 7 and related names. Think about what's the next play, what's the second order, the third order effect here. Yeah, I was just going to say, from that perspective, we think it's the diffusion of AI through the economy into more of these legacy kind of old economy type names. So that's something that we're positing to clients is, okay, we appreciate the fact that there's this sort of momentum play in markets and you're a little bit skittish about levels here and valuations. Let's think about areas where we can rotate into things that offer better value right now in markets while maintaining some of your exposure in aggregate.
Like healthcare or what?
Yeah, I think healthcare, industrials, sort of these manufacturing segments of the economy. Again, just these old line areas of the economy, even business services, more traditional businesses like that. And we look at it not only from the public market side of things, but the private market side of things. So we spend a lot of time looking at private equity or certainly venture capital growth equity. But if you think about private equity and the way that they can touch these traditional businesses, small, medium-sized businesses, apply some AI in a thoughtful, novel way, and drive real productivity gains. And if you can find a manager that can do that in a really systematic fashion and has some sort of edge in terms of the way that they're deploying that throughout their portfolio, we think that's a really interesting complement to what you're seeing on the public market side as well.
Well, let's go back to public markets and just think about geographies for a second. Where do you think this happens in terms of AI spilling out into the non-AI companies over the next couple of years? Does it happen in the U.S. or would investors be good to look outside of the U.S.?
Yeah, I think it happens globally. And this weaves into another theme that we're seeing and expecting to continue to play out, which is really deglobalization, but re-regionalization, I suppose, is the way we would frame that, in the sense that Europe gets more Europe-centric in the way that it thinks about maybe even its own AI technologies, and sort of the sovereignty around its AI capabilities. But we think AI will be a universal technology that gets deployed across the world in different capacities. And then that really ties back into this relative value theme as well, right? Where you're looking at markets ex-US that are trading at much more reasonable valuation starting points, but continue to have a pretty good catalyst in terms of fiscal spending picking up, defense spending certainly within Europe is a sort of poster child there. You've got loose fiscal policy in Japan. You've got China, which looks set to continue to be providing stimulus to its market. So you've seen this positive revision in earnings expectations. If you look at the IFA, if you look at emerging markets indices, we think that then is kind of the relative value rotation theme for us, where you come out of some of these mega cap tech names that have done so well, look at other areas of the market that are poised to sort of accelerate their earnings growth into 2026.
Biggest risk in the new year? Just quickly, just got about 30 seconds.
Yeah, it's inflation to us. It's if inflation stays stubbornly high, and we're already seeing, the 10-year today is ticking back up towards 4.2%. But if you see inflation expectations really re-rating to the upside, you see that 10-year move back towards 5%. We think that's the big concern. Then all of the knock-on effects that come alongside sort of longer duration securities repricing as a function of elevated inflation expectations. So that's what we're watching really, really closely in the next year.
Andrew Cry, thanks so much for joining us, Chief Investment Officer at Crescent Grove Advisors. Hopefully next time we see you back here in New York.
All right, just want to mention some headlines crossing from President Trump. Said he is leaning toward choosing either Kevin Warsh or Kevin Hassett to lead the Federal Reserve next year. He thinks the next Fed chair should consult with him on where to set interest rates and wants interest rates to be 1% and maybe lower than that a year from now. So he confirmed, too, that he met with Kevin Warsh, pressed him on whether he could trust him to support interest rate cuts if he were chosen to lead the central bank. This story on the Bloomberg.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, everybody, just about 7 minutes to go until we wrap up the trade on this Friday and for the week overall. As we've mentioned, stocks continuing to be lower across the board, hovering just off their worst levels, down almost, no, actually 1.1% on the S&P 500. You've got the Dow off about 0.5 percentage point, and the NASDAQ 100, those tech names, tech-heavy index, the NASDAQ 100 down, Tim, 2%, but again, off its worst level of the day.
I am looking at Polymarket.
Oh, what are you seeing?
Well, I'm looking, and the reason I'm looking at Polymarket is because the Wall Street Journal out with a story at 3:45 p.m. Wall Street time, so less than 10 minutes ago. It was an interview that President Trump did in the Oval Office today. He said the next Fed chair should consult with him on rates. He said he's leaning toward Warsh or Hassett, so one of the Kevins, on the Fed chair. And what I'm seeing on Polymarket is that the odds, which just earlier this month were at Kevin Hassett at 85% and Kevin Warsh at 7%, are now down to Kevin Hassett at 66% and Kevin Warsh at 29%. So just and a lot of the
slight
increase,
adjustment, right? Or
no, pretty
you think
big
that's
adjustment.
pretty significant?
Yeah.
So from 80, what was it? From 80 what to?
So Kevin Hassett was at 85% on December 2nd.
Now
he's down to 66%.
Okay, so that's a big haircut. What? Why are you
now
crunching?
CNBC out with the headline. Trump says Kevin Warsh at top of Fed chair candidate list. This just crossing at 3:54 p.m. Wall Street time.
And so the wrangling continues. Ultimately it's going to be whatever the president decides. And I'm just looking at some of these headlines. In an interview with the Wall Street Journal in the Oval Office, as you said, Tim, the president said Warsh was at the top of his list. Yes, I think he is. I think you have Kevin and Kevin. They're both, I think the two Kevins are great. He said, I think there are a couple of other people that are great. Hassett definitely has been increasingly viewed as the front runner after the president teased in recent weeks that he had settled on his choice to lead the Fed. And we even heard from Kevin Hassett, was it on the Fed decision day, where he made some comments that the president was going to make his decision in the next week or two. So it does sound like there's some momentum out there.
The president also said, that the president should be consulted on rates, which I think is really interesting because that's not part of the independence of the Federal Reserve. The whole idea that, the Fed is an independent body of the executive branch.
Well, here's a little bit of color. Again, reading from the Wall Street Journal interview with President Trump, he said, this is from the president, and it's a quote, typically that's not done anymore, meaning the president consulting or the next Fed chair consulting with the president on setting interest rates. So the president said, typically that's not done anymore. It used to be done routinely. It should be done. He went on to say, quote, direct quote, it doesn't mean I don't think he should do exactly what we say, but certainly where I'm a smart voice and should be listened to. So again, this is what the president has to say. I would have to ask Mike McKee about this. It used to be done routinely.
Yeah, and I do want to say,
because the independence of the Fed has been always paramount.
I cited a CNBC headline. It seemed like CNBC was actually citing the Wall Street Journal story.
That's what I was going to say. It feels like it was probably the same story,
yeah,
right?
It's the same story in that same interview that you were reading from.
Yeah, let's remind everybody, the Fed cut its benchmark interest rate by a third time this week. What?
Kevin Hassett is now down to 56% on Polymarket. He was at 66% just minutes ago.
Yeah.
Now Kevin Warsh is up to 34%.
I think it's safe to say, I feel like you and I have been having some conversations around this table in the last week or so, week and a half or so, about whether or not there could be other individuals that might, even though the markets seem to have been banking on Kevin Hassett.
We're going to talk a lot about prediction markets in our 4 p.m. hour. We've got a great roundtable coming up.
Yeah.
Not just on, everything happening with just predictions, yes or no, but also on sports and parlays and those things.
I thought I heard on surveillance this morning that even people were talking about the possibility of Treasury Secretary Scott Bessent.
So Bessent's at 2.3% on Polymarket.
Yeah. But you never know.
You never know.
We'll know when the president knows and he actually makes an announcement. So stay tuned for that. Do not go anywhere. Stay tuned also for the close of trading. The closing bounce starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Katie Greifeld, taking you through to that closing bell with the global simulcast. We're joined now by Carol Masser and Tim Stenovic in the radio booth. Welcome to our audiences across all of our Bloomberg platforms, including our partnership with YouTube. We got a lot to unpack here, guys, so light your incense sage, hide the kids. Carol Masser, what do you make here of the sell-off today?
What do I make of the sell-off today? It's kind of these narratives that have been kicking around for the last couple of weeks, right? Concern about the AI spend and build out. I also think the Fed speak has been a little conflicting. And, speaking of that, you guys, I'm sure, were just breaking these headlines from the Wall Street Journal, that the president's leaning towards Kevin.
It's a Kevin, right?
It's definitely a Kevin.
It's definitely a Kevin. It's definitely a Kevin. Well, it is definitely a Kevin as far as we know now.
Yeah.
Right?
Well, why wouldn't it not be now?
Well, we all thought it was Kevin Hassett a few weeks ago.
Is
and
it Kevin McAllister, maybe?
I'm just
I
saying.
like it. That's a Home Alone reference to everybody out
Thanks,
there.
Tim.
Children of the 80s.
I'm just saying we're going to know
You're
when
the
the
real
president
ones.
ultimately makes a decision and says it publicly.
I was just looking at Polymarket because these odds are moving in real time. And just 10 minutes ago, even after the Wall Street Journal story broke, Kevin Hassett was still at 66%. Now Kevin Hassett's down to 56%. Kevin Warsh up to 39% odds. The odds moving just in the last few minutes after this Wall Street Journal story crossed.
Yeah, I want to know what the liquidity looks like in that market.
Volume's $39.9 million.
Okay. I don't know whether or not that's a lot. It's cool to have that stat.
Yeah. Sorry, I got a little distracted.
Are you placing your bet?
Well, no, I went on to Google here to look up the most famous fictional Kevins in the world. Kevin McAllister does rank up number one. Kevin the Minion is number two, in case you cared one way or the other. We don't need to go through the rest of the list. Let's get you the closing bells here in New York, which not only includes clapping and cheering, but actually confetti there at the NASDAQ, and I'm not sure why, but all of the major indices are in the red on the day, and it looks like mostly for the week. The Dow Jones Industrial Average is going to lose about 0.5% on the day. The S&P 500 down a full percentage point, about 73 points. The NASDAQ Composite, that's your main laggard, down about 1.7%. The NASDAQ 100 down about 1.9%, and the Russell 2000 also pulling back healthily on the day, down about 1.5%.
Also, Kevin Arnold from the Wonder Years.
Yes.
And Kevin Malone, The Office. Did you say that one?
No, I didn't, but I used to love the Wonder Years. Winnie?
Yeah,
I used to have a crush on
I know. Who didn't, right? Yeah. S&P 500, guys, almost an even split. 221 names to the upside, Katie. 281 to the downside, one unchanged.
The Wonder Years is also a great band. But let's talk about the circle in front of us. You can see a real mixed bag here when it comes to the sector performance amid this sell-off. 5 managing to finish in the green, 6 in the red. In terms of what did do well today, consumer staples up top, higher by about 0.9%. Certainly a defensive tilt there. Meanwhile, you take a look at what didn't perform, and you guessed it, it's tech, down 2.9% as a sector. Energy and communication services also certainly hurting today, Carol.
Yeah, the SOX alone was down, I think, more than 5% in today's session, so you definitely saw that playing out. Thank you, Broadcom.
It was 5.1% if we were going to be specific.
Okay,
Worst day since October 10th.
I am done. Let's get to some of the individual gainers, if we may, on this Friday. Lululemon, guys, check it out. Top gainer in the S&P 500 and NASDAQ 100, finishing the day with a gain of about 9.6% off its highs, but still nonetheless outperformance there. The shares rallying after the company boosted its full-year outlook, announced its CEO would step down. So as we know, we were breaking this late yesterday. The company looking for a replacement for the company's CEO, Calvin McDonald, who will depart the top post at the end of January. So nonetheless, investors enthused about what's to come next for Lululemon. Hey, also weed stocks, which have been taking a beating, kind of smoking today.
This is insane.
I know. Yeah. Check this out. Canopy Growth up 54% in today's session. That's the ADRs that trade here in the United States. Go over to Tilray. That went up about 44% in today's session. Again, backdrop is that we know that they've been beaten up a lot. So just got to kind of put that into perspective. But what the news is, President Trump, or at least he's expected to direct his administration to move to reclassify marijuana as a less dangerous drug, according to people familiar. So pushing to reclassify it as a Schedule III drug.
Yeah.
And that would be really a victory for companies and investors and patients who use medical marijuana.
Did he address the issues that were in that most recent congressional bill that would effectively get rid of like edibles and a lot of other products?
I don't know. Did he?
No.
Okay. All right, so there's more to come, right?
Is that a rhetorical question?
I don't know.
Most of my questions are rhetorical. You know.
I never know when to ignore and when to listen. All right, another group on my mind, fast food, fast casual. Check it out, guys. Let me go through a couple of different names. You have Chipotle. That one is up 3.6%. Shake Shack's up 5%. Kava was up as much as 5.6%, ending the day with a gain of just shy of 1%. Baird analyst David Tarantino seeing these companies as potential beneficiaries from the 2026 World Cup, as you know, being hosted by U.S., Mexico, and Canada. Here's what he has to say. He says the increase in tourism and broader consumer mobility activity tied to each sporting event over the 6-week period will lead to increased spending at restaurants in and around the host cities, and also provide some of these brands a
they want to come and eat that American food, the fast casual that we're known for.
Just saying. Eat and go. All right, what do you got, Tim?
All right, I got to start with shares of Oracle falling by 4.5%. This after Bloomberg's Brody Ford reported that the company has pushed back completion dates for some of the data centers it's developing for OpenAI to 2028 from 2027. This is according to people familiar with the work. The delays largely due to labor and material shortages, said the people. Oracle, a spokesperson, said in a statement that the company remained confident in its ability to meet its obligations and future expansion plans. And Carol mentioned Broadcom down 11.4%. Worst day going back to January. You know, we spoke to Ian King about this earlier. He said the numbers were fantastic. It was that sales outlook, though, for the AI market failed to meet investors' expectations. Hock Tan said the company has a backlog of $73 billion in AI product orders that will be shipped over the next 6 quarters, but warned that total margins were narrowing because of AI product sales and held off on giving an annual AI revenue forecast, saying it was a, quote, moving target. And finally, shares of Dell falling by 6.2%. This after Business Insider said the company is set to increase prices next week across its commercial product lines. Business Insider cited an internal list of upcoming price changes sent to staff on December 9th. Dell shares down by 6.2%.
All right, a quick check on yields here. It was another interesting day, but more importantly, an interesting week. 2-year yields were lower on the day and on the week, but pretty much across the rest of the curve, we were higher, not just on the day, but on the week as well. In fact, 2 straight weeks now that we've seen the benchmark 10-year as well as the long bond, the 30-year, actually go up rather than down, despite some of those rate cuts.
Oh, so let's go to some stories that have caught our attention. There's a lot of stuff coming at us this week, no doubt about it. This one, though, from Netflix. Lots of malls, department stores that have either shut down and there's been some vacancies. Anyway, Netflix has been turning some of these malls and department stores into immersive playgrounds. So they've got a new permanent brand activation. They've got a movie theater and a retail outlet. It's called Netflix House. It's at the King of Prussia Mall in the Philly suburbs. And so you've got things like a Twisted festival, an escape room, a sports bar. Right?
Yeah, Netflix-themed sports bar. It's all part of an effort to extend the lives of those popular TV shows, create these experiences that are away from the screen for its fans. 2 more locations are planned to open in the U.S., Dallas, and also, you could probably guess, Las Vegas.
It's pretty interesting. I mean, it sounds like a mini theme park housed inside a mall. It makes a lot of sense why they would do something like this. I do wonder what a Netflix-themed sports bar specifically
I want to know what the Squid Game activation is.
Oh, my God. Probably terrifying.
What do you do with that?
You know, speaking of malls, I don't know if you've had a chance. You know, if you go just up here away from Bloomberg World Headquarters, it's the big Ralph Lauren flagship store here. Apparently, Ralph Lauren Christmas, the whole phrase has been trending for quite some time, a reference to, if you've ever seen the decor that they have decked out, the sort of cozy, very sort of rich, homey feel that they put on their holiday decorations, their aesthetic, if you will. Apparently it's taken off, and like I guess everything online, apparently now it's going to consume every single thing that we do this Christmas.
I really love that chart because, I mean, okay, the spike that we're seeing this year is certainly noticeable, but then you take a look, it's so consistent of a bump. Apparently every Christmas, I didn't know this, people really want to know what's going on with Ralph Lauren Christmas.
What I love about this too, and I guess Carol and Tim have no comment on this, but it gets to the idea, though too, I mean, it is very, like it's very, you know, I mean, you know, this whole, it's almost like their normal aesthetic, you know, it's not even just like the Christmas, it's just that now it's, you know, red and green, but it's just, you know, the same, a lot of flannels and patterns and, you know, big leather chairs and fireplaces.
I was going to say they have been, I feel like, selling and marketing a lifestyle for a long, long time. Their advertising has been like that for decades. And so they just kind of amp it up around Christmas. It's kind of like your home, right, Romaine?
It's kind of like...
It's cozy.
No, my home, no. My home's a mess. What's your favorite Christmas movie, Carol Masser?
Die Hard?
That's very funny. I have to. I end up watching A Christmas Story a lot. It's my husband's favorite, so I end up getting stuck watching that.
All right, I'll answer the question
I went to
too.
Cleveland earlier this year, and I went to visit the Christmas Story house. Yeah.
The actual house, yeah. It's
Christmas Vacation is the best one.
Yeah, that's
National
good too.
Lampoon's.
Elf should get a.
Katie, you gonna weigh in? Is it Die
mention.
Hard?
Katie doesn't watch movies.
Not really.
Oh.
I'm more of a 20-minute TV show kind of gal, or a 6-second TikTok sounds pretty good.
I also do love, actually.
Yeah, that's a classic.
I know, it's a classic. All right, guys, that's a wrap. Have a great weekend, a safe weekend. That is a wrap for our cross-platform coverage. Radio, TV, YouTube, Bloomberg Originals. We call it the closing bell. Romaine and Katie continuing there on television. Tim and I continuing right here on Bloomberg Business Week Daily.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It's Bloomberg Business Week Daily. That's Carol Masser. I'm Tim Stenivek. Oracle shares, I mentioned, took a hit today. Bloomberg reporting that the company has pushed back the completion dates for some of the data centers it's developing for AI developer OpenAI to 2028 from 2027. This is according to people familiar with the work. Oracle has become sort of the poster child for is there or isn't there a tech bubble?
Yeah, the bubble question. It helps if I push the button. It is a Friday. The bubble question, it's one that's explored on the new episode of Bloomberg Wall Street Week. That's tonight at 6 p.m. Wall Street time on Bloomberg TV and radio. David Weston, of course, the host of Bloomberg Wall Street Week. He joins us here in our Bloomberg Interactive Broker Studio. Maybe AI will help me to put my buttons on. AI, I do feel like, yes, Oracle is a big part of it, but I just feel like, David, the narrative has gone from spend, excitement, to wait a minute, is there an overspend as we look at this
that's
overall
what we was
trend?
talking about, right? Is there a bubble here? Sort of like we had 25 years ago with the tech bubble. Are we repeating it or not? Although you talk to people and they think there's a long way to go. And one of the things we did is we went and talked to Lisa Su, who's the CEO of AMD that makes the chips. And we asked her about it, and she was pretty emphatic. She's not worried about it. This is part of what she had to say, and then we can talk about it.
I find it kind of interesting that you go from super excitement about a technology to, oh, wow, big concern. Look, being a engineer and technologist for a long time, you see technologies and you see those that are kind of fads, and then you see those that have extreme potential. And, AI is in the realm of extreme potential. The last 2 years, we've been talking about it. We've seen, sort of the advent of ChatGPT now turn into, is there a AI bubble? And I say that we're just starting to see the real utility of AI. Yes, the investments are high, but why are we all so confident that there's a payoff at the end? Because we can see, the way AI has been improving over the last, let's call it couple of years, has been faster than any other technology that I've seen. The adoption rates have been faster than any other technology. The potential is faster than any other technology. But what I'm here to tell you is that it's nowhere near its peak capability.
That's Lisa Su from AMD. But she says that for two reasons. One is just she sees the demand. And the demand for compute power way is greater than what the supply is right now. As we saw, frankly, with some of the Oracle news today.
Right.
About the data centers. But the second was that she said she just spent the weekend using AI. And she said, she came away saying, boy, this is really good, but it's going to get so much better. She said, we have so far to go with this. And she's a computer engineer. That's what her background is. She's a real technologist.
I'm frantically going through my emails trying to remember who you spoke to a few months ago.
Jeffrey Hinton.
Yeah.
Thank you.
The father of...
Because, Godfather.
Godfather.
He's called the, you got the Nobel Prize for it.
The conversation that you had with us ahead of that premiering on Wall Street Week that evening has been something that's stuck with me since, in terms of the payoff of this. Because, okay, if Lisa Su says that the payoff of the investment will be there, certainly that's great for AMD, it's great for NVIDIA, it's great for all these companies and these, CoreWeave, et cetera. But what does the payoff look like? Because if the payoff is indeed true, then what does that structurally mean for what our economy looks like?
I think all of them would say they don't know, because actually, I think the response I get from Jeffrey Hinton and others is, it's so profound, it's going to go places we don't know about. But let me give you 2 or 3 specifics. They all talk about biomedicine. Drugs and treatments will go up. By the way, portfolio management, they say it'll be really different in portfolio management. And just overall, I spent some time with Reed Hastings this week. We did
at the Economic Club, right?
Yeah, Economic Club in New York, exactly right. And he said it's productivity. And the productivity is really going to go up dramatically. Now, what I did say to him is, you can have GDP growth without people.
Right.
So what does it do to jobs? And he said, well, that's a good question, what it does to jobs. But overall for the economy, real productivity growth.
Even Jay Powell addressed that in his presser, and he said it hasn't affected AI specifically, hasn't affected jobs yet. So like time will tell. What I thought was interesting when Lisa Su talks about adoption rate, and this is something I'm trying to understand with the AI spend, I feel like there's pressure on all companies to make sure they've got a hand in it, and that they're pursuing some kind of strategy. But right? You've run companies, like you sometimes invest in something and it doesn't ultimately pan out like you thought, and then you pull back. So I just feel like we're in this kind of Netherland that we just don't know what's next.
That sounds exactly right to me. I have to say, every single person I know who actually knows it is completely confident it will be huge. Now, to say it's huge overall is not to say everybody's going to make money off of it. I mean, you're putting this much money this fast into anything, some of it's going in the wrong places. But overall, they're 100% sure, even if they can't predict exactly how it's going to happen. But part of the reason we did this story, which is a bit of an obscure course, is open source versus proprietary. That's what I really want to search for, because Meta was so terribly proud of being open source. And most of our big models in the United States are actually proprietary. They're closed. Google, Microsoft, things like that. You know who's open source? No, China. China's gone open source, which I found ironic, that China's gone open and we're closed now. And then in the middle of all this week, Meta announced, well, next AI model, we think we'll go proprietary.
Not so much, right?
Not so much on the open source.
Well, wait, so what do people say about China's open model? Why are they doing that?
Well, I'll give you 2 possible answers. Sorry, Tim. 2 possible answers.
I'm sorry.
Two possible answers.
You're never with us long enough, David.
Some people say, I got to be quiet. But some people say, if you're behind, you go open because you need to catch up.
Okay.
But the other argument is you'll move a lot faster if you're open because you get more developers working on it.
Okay.
Okay, sorry. I want to make sure we have time for Disney because this environment creates strange bedfellows.
He's been saying, we got to get David. We got to get David.
Like as soon as this deal yesterday came up, I was like, we got to talk to David about this. You spent a lot of time at Disney. You understand creatives. You understand the company. The announcement this week that Disney will take a $1 billion and make $1 billion investment in OpenAI, while at the same time it's having the legal issues with Midjourney over the characters. Carol, like, what is this? This is a big moment for this company because they need to have this relationship with creatives who are worried about AI, and they're also so protective of their IP, as Carol mentioned so much yesterday.
I just find it interesting. Like, how do you make sense of that?
Well, first of all, to say you understand creatives, nobody understands creatives. But the very nature of creativity is almost unheard of. I have spent a lot of time with Bob Iger. I've worked very closely with him for years and years. He's a really good deal guy. And so he makes good deals, so I believe in it. Now, that said, I will say, months ago, we did a story for Wall Street Week on what copyright does with AI and what it does for the creative community. We actually had some people who are painters that sold paintings online and what it means because they were some of the AI models were training off of their paintings, and they were bringing lawsuits against that. So this has been in the water table for some time. This is the first big move forward. I don't know enough to know, but my guess is this is smart on both their parts. OpenAI doesn't need the grief. And you saw Disney issued a cease and desist order to Google at the same time they did the deal. Disney gets some money off of it. They start licensing it. But by the way, in licensing, you gain control. You know, it's a 3-year license, and it's not even exclusive for the whole 3 years. And so you learn it. First of all, tuition. You learn about how it's working. You see what happens. You're in at the ground floor level, and you gain some control when you license because you can pull the license back. You can not renew the license. That's my hunch, at least. That's my thinking. I'm more interested actually to go back to the media and what the Oracle stock price is doing to the bid for Warner Brothers Discovery.
Well, that's a great point.
You know?
Well, there was
the
Times
financing that does not look quite so good anymore.
At the Times, it said Larry Ellison has yet to says the money's there, but hasn't maybe giving them anything.
No, but my understanding for people who know him was his money is in the stock. He can't sell the stock in Oracle because it'll tank the stock. That's why the Saudis are in.
We need to blow the break. David's here. This is Bloomberg Business Week.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. And this Bloomberg Business Flash brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver info guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That is goldencrestmetals.com/guide. The Dow, the S&P, NASDAQ all declined today. Stocks tumbled as the year's winning AI bets took a hit. S&P today down 73, drop there of 1.1%. Dow Industrials down 0.5%. NASDAQ down 1.6%. Oracle down 4.5%. Broadcom, after last night's earnings report, down 11.4%. Nvidia today was down 3.3%. The Mag 7 index tumbled 0.7%. The 10-year this Friday, 4.18%. The 2-year, 3.52%. Gold up $23 the ounce, 43.03. A gain there of 0.5%. West Texas Intermediate crude down 0.2%, 57.47 for a barrel of WTI. And we saw Bitcoin today down 2.9%. Bitcoin wrapping up the week just above 90,270 on Bitcoin. Pot stocks flying high today. We did see them surge. Case in point, MJ, which is the marijuana ETF. That today was up by 42.8%. That's the Amplify Alternative Harvest ETF. Tilray Brands up 44%. Canopy Growth Corp surged 54%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Sound a little tired there, Charlie.
No,
He's on full speed.
I will take our listeners inside what was going on. The last stories that I did were about pot stocks. The word I didn't want to stumble on was podcast, because what was about to come out of my mouth was
podcast?
was wherever you get your pot stocks.
Oh.
That's what I was about to say. So, correction there.
Well, it's still Canada because of the U.S. regulatory
We have a great
environment.
audience. They would have loved that.
Yeah, it's
I'm
fine.
just saying.
Yeah, and
All
we're
right.
doing it all at 4:20.
Yes, we. Oh, well done, well done, well played, Charlie
It's
Pellet.
hard, tough act to follow, but there is a lot happening in sports right now, in the business of sports. You've got NASCAR on Thursday settling an antitrust lawsuit brought by Michael Jordan's racing team, alleging that the organization holds a monopoly over premier stock car racing in the U.S. and that its charter agreements are unlawful. And then there's the entire rise of prediction markets that's seemingly minting new billionaires each and every month. We've got a great roundtable. Marty Edel is co-chair of the sports law practice at Goulston and Storrs and adjunct professor at Columbia University. Also with us, Bloomberg News Business of Sports reporter Randall Williams. He joins us here in the Bloomberg Interactive Brokers studio. Marty, I want to start with you because as a condition of this proposed deal, and I want to start with NASCAR, NASCAR will amend the terms of existing charter holders, which will include a form of evergreen charters, and Jordan's team will have chartered team status for the 2026 season. I just want to get an idea from you over monopoly power within different sports leagues and within different sports in the United States, because it's a small number of very powerful people and a small number of teams. Is this increasingly becoming an issue?
So the answer is decided yes and no.
Okay.
For leagues with collective bargaining agreements, the answer is no, because the collective bargaining agreements tend to supersede the antitrust laws. For leagues which do not have collective bargaining arrangements, such as most of the individual sports leagues, and now as we're also seeing with the National Women's Soccer League, the answer is yes.
So we talked about this earlier, but one of the things that we were saying was this opens up the opportunity for potential NASCAR franchises to be sold. And I've been here dozens of times. We talked about private equity stakes being sold, control stakes being sold. You never hear about NASCAR teams being sold. Marty, tell me, do you think that there's going to be a lot more transactions because of this? Or are there going to be people who say, you know, there's 36 NASCAR teams, I believe that I read earlier. The people are like, you know what? Now that I can sell, why not get my $200 million?
So I think the answer here is yes, because for the existing charter members, the 36, the price of their team will go up dramatically because there are fewer restrictions on their ability to compete. There are greater opportunities for them to make money, and that all translates into higher selling prices if and when they want to sell. It will also now, because of the greater freedoms on the ability of teams to compete, should attract new team owners into the NASCAR world, and that will create more opportunities for more drivers, more pits, more fans to watch increasing number of NASCAR races.
And Marty, should we assume then this opening will create more of a marketplace and drive up the prices?
So I think, let me deal with that in reverse order. It certainly will drive up the prices. Whether it drives it up for fans or not, I don't know. I haven't seen the specific details of the agreement, so I can't say what the financial impact there would be. But it will drive up the price for racing teams. It probably will increase the cost of media coverage, which is good for the racing teams in NASCAR. And it may create more opportunities to have more teams as well.
Okay, I promise that there's a lot to talk about, and I want to shift gears and talk a little bit about prediction markets, because our Bloomberg Intelligence team out with a note this week that says prediction market volume has doubled in a year, fueled by Kalshi's NFL-driven surge that now exceeds general election wagers, while Polymarket is more diversified with international politics and crypto. But as Polymarket returns to the U.S., volume may shift towards sports contracts ahead of the Super Bowl, but rising legal scrutiny over whether these markets bypass state betting laws threatens this key growth engine. Ren, I want to start with you and just very generally, and we could do 20 minutes on, we could do 2 hours on prediction markets, but in the years that you've covered the business of sports, how has the legalization of gambling and related prediction markets changed what you report on?
What I report on, it hasn't changed the nature of my job. However, it has had tremendous impact in the sports industry. I mean, you look at the NBA right now and what they're going through with Chauncey Billups and some of these, these people who have been accused of various gambling under the table. And so these prediction markets complicate that even further because of the fact that if you can predict something, who's to say that this doesn't happen again, not just in the NBA, but in other sports like the NFL. Let's talk about the NFL, for example. It's a much more difficult sport to manipulate. However, if you can bet 6 months down the line, who's to say that there isn't a 100-person ring out there that's going to try to do the exact same thing? It is absurd.
Marty, if sports, moves even more aggressively, or Polymarket and the betting, the prediction markets move more aggressively into sports, is that just gambling, another form of it?
Well, that's not what those companies claim. They claim it's legitimate sports betting. All they're doing is providing hedges for investors. So, for example, you bet $1 on a yes or no. Will this team win or will this team lose? The cost of buying it for $1 may be, the market may translate that into 60 cents. So if the answer is yes, and that turns out to be the final answer, you'll make the profit of the 40% there. So there are lots of opportunities here. Is that really an exchange? Polymarket and some of the other companies there claim they're exchanges. All they do is be the middle person in these transactions for which they get fees.
But what do you say?
Well, I think it's a much closer question than what they say. There have been at least 6 cases in 6 different states where the answers have come out differently. Not a big surprise there. In a couple of states, they said, no, they're not exchangers. They're not, therefore, subject to federal law under the Commodities Futures Trading Act. But they are subject to state regulation. None of these entities, at least so far, want to be subject to state regulation.
Randall, I want to ask you, in your coverage and talking to either owners and other players and just all the aspects of the world of sports, the business of sports, do they have a take on Polymarket and these prediction markets?
Not necessarily.
Okay.
But the interesting thing about all of this is that everyone in Kalshi and Polymarket's defense is, oh, no one's ever going to do this. They make millions of dollars, they make billions of dollars, and then we keep seeing examples pop up. Now,
we were never going to have online sports betting, I thought, too.
And one of the things that's most interesting about it all is that the leagues are partnering with sports books and things like that. Now, that hasn't happened for both of these yet, despite them offering things. And so who knows, does Adam Silver and Roger Goodell and let's say Rob Manfred come out and say, that's something we don't want to be a part of because it is too volatile?
Well, it takes me back to 2014 and that opinion column that Adam Silver wrote for the New York Times, legalize and regulate sports betting. And my question—
He's never going to live it down.
Yeah, he's not. I mean, even like my question for someone like you, Marty, and I was recently listening to a podcast about this because I didn't realize how much the experience of like going to a game has changed.
Absolutely.
We thought that, well, I don't say we, but a lot of people thought that this would be great for the leagues because it would increase engagement and get more people to watch, more people to go to the games. But what my understanding is that since people can wager on so many different elements of the game here that aren't even related to what the players are actually doing on the court, they're not necessarily focusing on that element of the game that actually gets people engaged. They're focusing on all these other details. It just, in your view, Marty, net, has it been good or bad?
It's, if you define good as how much money they're making, all the participants have profited from the arrangement.
How do you define it?
If you have a morality question, then it's up in the air.
if you talk to NBA players, you talk to baseball players in particular about what they're hearing at the games, they get a lot of hate on the sidelines of people being like, let's use Tyrese Halliburton, for example, or let's use Jalen Brunson. If Jalen Brunson doesn't score 30 points, he might have someone yelling on the sideline, Brunson, I need 30 points, and he's at 7. And so it has drastically changed the relationship that athletes have with fans. And quite frankly, the leagues are comfortable with it. Why? Because they're being paid for it.
But is it bringing more fans to the game? I think there's often been some worry about, younger generations or to pick your game.
I would say it is
different.
providing a new way to watch the game. If you like sports gambling and that is the content you want to consume, then there are a multitude of ways that you can consume it. Now, is it bringing new fans? Of course, because if you turn 18 and let's say you turn 18 in November and now you can bet while you're in high school, you're going to have a lot of fun being like, oh, I just turned 20 to 40, but it opens up the opportunity for addiction.
Marty, it makes me think about, and that's a great point. I think about the gamification of society and kids, especially guys, young men, boys who are growing up playing video games. It's just like, you kind of just go off to another platform. Is there a bigger, broader, maybe issue, problem, the gamification of our world? And just got about 30, 40 seconds here.
So the answer is sure there is. Did I come within the 30, 40 seconds?
Yeah. Oh, okay. You're done. Randall, just to wrap up then, anything going to change though? Or this train has left the station?
I think that, look, we're going to see how the NBA's gambling scandal plays out in federal court, of course. And after that, then we'll be waiting for another one, because once you start accepting money, it's very difficult to tell billionaires, we're not going to dip in that pool anymore after they've already had their feet wet.
I just remember when the ESPN studio opened up in Vegas and people were like, who'd have thought that ever would have been there? Like, it's just a lot of things that you never thought would happen, and they did. Guys, this was fun. Let's do it again.
Absolutely.
Marty Edel, he co-chair of the sports law practice at Goulston and Storrs, and adjunct professor over at Columbia University. And of course, our Bloomberg News Business of Sports reporter, our own Randall Williams, joining us here in studio. Guys, thank you so much. Have a great weekend.
It's 4:40 on Wall Street. We do check markets all day long here at Bloomberg. Sources tell Bloomberg the Trump administration has renewed a license for Chevron to continue pumping oil in Venezuela. The renewal came after U.S. forces seized a tanker carrying the country's crude, capping a week of rising hostility between Washington and Caracas. It was a down day today for the Dow. The S&P and NASDAQ traders took profits on the year's biggest AI winners. S&P fell 73 points, wrapping up the week, heading into the weekend at 68.27, a drop today of 1.1%. Dow Industrials today lower by 0.5%, down 245. NASDAQ hard hit, down almost 400 points, down 398, a drop there of 1.7%. The NASDAQ 100 index down 1.9%, and our Mag 7 index today down 0.7%. 10-year at 4.18%, with a 2-year 3.52%. Gold up $23 the ounce, 43.03, up 0.5. West Texas Intermediate crude down 0.2%, 57.47 a barrel, and Bitcoin down 2.8%, 90,268 on Bitcoin. A disappointing sales outlook from Broadcom sent the chipmaker tumbling 11%, also weighing on rivals, further fueling investor anxiety over AI wagers initially prompted by Oracle. Oracle down 4.5%. Andrew Cry is Chief Investment Officer at Crescent Grove Advisors. And right here on Bloomberg Business Week Daily, earlier today, he talked about the outlook for both AI and also AI stocks.
The risk going forward is that so much is in the price at this point, right? You've got such a sort of perfect outlook that's being priced into these companies at this point. And in particular, take a company like Oracle, where you're seeing more debt funding come into play, as opposed to some of the other Mag 7 members that are largely funding their spending out of free cash flow.
Andrew Cry, Chief Investment Officer at Crescent Grove Advisors, interviewed right here on Bloomberg Business Week Daily. Again, Oracle shares down 4.5%. Broadcom, after earnings last night, down today by 11.4%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Appreciate it. Hedge funds, brokerages, billionaires. Jeffrey Epstein's financial ties on and off Wall Street were broader than previously known. This according to a cache of emails. Also, what the FBI, DOJ hid in the Epstein files review. And then, Carol, just today, House Democrats have released a tranche of new photos from the estate of the late Jeffrey Epstein that include President Donald Trump, former President Bill Clinton, Bill Gates, Steve Bannon, and Larry Summers.
Yeah, we couldn't wait to talk once again with Jason Leopold. He's part of the Bloomberg News team that's been reporting on the emails and the Epstein saga. He's Bloomberg News senior investigative reporter, the author of the FOIA Files newsletter. Comes out today, every Friday, in fact. Read it, and you can subscribe on the Bloomberg terminal by going to bloomberg.com/newsletter. Jason, once again, joining us from Los Angeles.
Jason, I wanted to start with the most recent news, the House Democrats, what they released today. This is a tranche of new photos. And we should note there's a lot that we don't know about the context of these photos. And it's not part of the FOIA files. But since you have done so much reporting on Jeffrey Epstein's emails and this tranche of documents, I'm just curious about your take on this.
Sure. So, these are part of the cache of records that Jeffrey Epstein's estate has been compelled via subpoena to turn over to the House Oversight Committee. So we saw emails last month, right? There was significant coverage around some emails that mentioned Trump, Larry Summers, and other public, high-profile public individuals. So now we have some photographs, and these photos show Epstein with, some pictures with Trump. There's photos with Steve Bannon and Woody Allen, Bill Gates, Richard Branson, Bill Clinton. So these are the people that were in Jeffrey Epstein's orbit. We have already known that. That's details that have been previously known. There's a lack of context here, though, right? So the photo, we don't really know exactly, what was happening, or what they were discussing. I haven't seen any dates around them, but it's just more evidence, if you will, about the powerful people that surrounded Jeffrey Epstein. And, this is coming just about a week before the deadline from the Justice Department to, turn over the Epstein files. December 19th is the 30 days, that 30-day deadline that's up, where they're going to, we'll find out whether they're going to release anything.
Well, that's a really good segue to the latest FOIA Files newsletter, because it's all about what the FBI and DOJ hid in the Epstein Files review. Talk a little bit about the FOIA lawsuit and what you found that the FBI withheld.
Sure. So I'm going to try to pack this into a nice little tight nugget here. So when
Sorry,
we're almost approaching a year when the Justice Department said that they would declassify everything that they had on Jeffrey Epstein. Pam Bondi had this rollout in February where she announced the first phase of the Epstein files, handed out some binders that we'd learn later were previously released documents. I wanted to find out what was going on behind the scenes after the directive was handed to FBI Director Kash Patel related to the processing of these records. And so I asked for internal FBI emails, materials that they used to train 934 FBI agents and other personnel who worked on this Epstein Files project. It was called internally, I found out from these emails, the Special Redaction Project. And what I received are a cache of 60 emails that kind of gave us the first look into what was happening behind the scenes. What I found very interesting through this, ultimately this FOIA lawsuit that Bloomberg and I filed, was what they didn't turn over. And what they didn't turn over consisted of some, these PowerPoint training materials. They described how they were redacting some of these records. There was a video on training. Then there were records related to an internal investigation into the FBI personnel who weren't complying, apparently, allegedly, with the order to process, these Epstein files. We know now that they're just based on these documents that there were electronic devices that's part of the evidence that they were, as they were reviewing the records this year, that they were scrutinizing. Could have been desktop computers, it could have been laptops, cameras, cell phones. Curiously, there is a reference in my newsletter, and it came in a court document, and this is a declaration from the FBI's head of the FOIA office there. When they were looking for records to turn over to me that were responsive to what I had requested, they said that they searched client lists. That's it. They just said they searched client lists to see if there were any responsive records.
So, Jason,
yeah.
Does this raise more than answer questions? Raise more questions versus answer more questions? Yeah.
Yeah, it raises a lot of questions. And my case as it relates to just getting these documents is ongoing. But the point I want to make in highlighting all of this is, there's a lot of secrecy. There's been a lot of secrecy revolving around what happened behind the scenes, right? Earlier this year, before the Justice Department decided, and the FBI, not to release anything. So, these records and what I wrote in the newsletter today, what my hope is that it chips away a bit at that secrecy and provides the public with some insight into what was happening behind the scenes, how the FBI was conducting its work. As I mentioned, there were 934 FBI personnel who were tasked with reviewing the Epstein files. The FBI paid $851,000 in overtime for just 1 week's worth, 1 week's worth of work on the Epstein files. So there's a lot of taxpayer dollars being spent here as well.
I also thought it was fascinating that there were training videos. Is that normal in a process like this?
You know, this process, I mean, I think this is what's important here, is that this process in and of itself is not normal. It's highly unusual, right? I mean, the fact that they gathered 934 people to do this is very unique. So they needed to train them on how to redact records, what to look for.
One of the things, Jason, and I got to say, Tim and I really look forward to these chats. And, a lot of what we've been talking about is Epstein. And, I was just jotting some notes, being in someone's orbit or in their black book or their plane manifesto or part of a birthday card book or seen in a photo doesn't necessarily mean you've done anything wrong. But the longer you work on this, and then go to the big, deep dive about looking at kind of the financial ties that Jeffrey Epstein had, that it's much broader than everybody thought. Like, can we make the assumption where there's smoke, there's fire, or we still don't know, but there's a lot of stuff that keeps coming at Jeffrey Epstein. Yeah. So it depends on what you mean, like what that fire would be. I mean, there were lots of people in his orbit. And what's become very apparent to us is that even after Jeffrey Epstein was charged, even after he pled guilty to a state charge in Florida, sex crimes charge, it appeared not to be of great concern to those he surrounded himself with, particularly as we reported earlier this week, financial executives on Wall Street. And these emails that we've obtained, what it does is it provides new details, about Epstein as an advisor, as an investor, how he leveraged his influence on Wall Street, and how they, in this case, hedge funds sought him out. What was happening publicly was not of a great concern.
Yeah, that's so interesting. And look, to be fair, we can't characterize everybody reached out to in the piece, but some have said, the relationship was strictly professional, and relationship ended in 2007. Yes. Before we let you go, and if you want, our listeners, our viewers, if you want more, this was a Bloomberg exclusive just 2 days ago that we're referring to, that Jason, along with a team that also included Max Abelson, Harry Wilson, Jeff Cow, Surya Matu as well. Bloomberg exclusive, a great piece about the financial orbit of Jeffrey Epstein. Are we learning finally where his money came from?
Great question. I mean, we're not, the emails don't answer it, but we're getting close. We're getting really close. And I think that is where we want to be right now in terms of, what we're looking into, what we're going to continue to look into is the source of that wealth.
Well, like we said, we just feel like the story continues to move along, and so much to you and the team here at Bloomberg in terms of, putting this puzzle together, if you will. And we know we're not done yet. So that means we'll see you again next Friday. Jason, have a great, great weekend. Jason Leopold, Bloomberg News senior investigative reporter, author of the FOIA Files newsletter, comes out every Friday. And be sure to also check out Jason's new podcast, Disclosure. As for his FOIA Files newsletter, you can find it at bloomberg.com/newsletters.
Just want to remind everybody where we closed out the day and the week on this Friday afternoon. The S&P 500 fell more than 1%. The NASDAQ down 1.7%. The Dow down 0.5 percentage point. The Dow, though, in the green for the week, up more than 1%. The S&P 500 down 0.6% this week. And Carol, the NASDAQ composite down 1.6% on the week.
I'm Carol Master along with Tim Stanovic. So let's get to some of the stocks on the move this past week. Back with us is Bloomberg News equities reporter Jordan Fitzgerald. We're going to start with Oracle, aren't we?
Seems like the obvious place. Oracle shares did fall about 12.7% this week. That was the worst week for the stock since 2018. So it's been a while since Oracle's fell even 12%. earnings did disappoint. They are spending more money than they're bringing back, and it has made investors concerned. And again, investors had high hopes. Last time Oracle reported, the stock actually had its best week since 1990.